Hey, this is David for BigBits, and we are going to get started here on the live stream. Today we're going to talk about a few different things. Most importantly is TA on Bitcoin and other markets in general. I'm going to look at a few different coins as well as tokens and look at a couple of stocks that I've been looking at as well, one of which is doing amazingly well today. I'm trying to figure out exactly why, but we'll look at that one as well. Then I want to take a look at some indicators that I'm working on, and the big one that I'm working on right now is one that's going to actually be a strategy. It's going to be highly customizable, which is going to be one of the ones that we are going to end up selling here, and that's going to be pretty exciting once that one gets complete. So I'm happy about that. But for now, let's go ahead and start looking at some TA. Now, if you'll notice, I have already circled this area. This around here when I circled it, that I thought we would have this kind of slow grind down to the 100 period moving average, and we never really came down there. So I'm not really sure we're going to go down there. The mid Bollinger Band has held the price up for like 8 days in a row now, something like that. It's kind of wild. And if you remember, or if you follow me on Twitter, I was posting about the 50-day moving average holding back here, and it eventually gave out. But then you got the bounce off the bottom bands, and it came back down. And this is when I thought we would just kind of slowly move sideways and down towards the 100 and bounce off of it. But the daily bands are super tight. That's meaning that we are pretty much expecting a lot of volatility soon. Usually when the bands get super tight, it's a precursor for a very large move that's yet to come, and a lot of other people are actually drawing out these sort of triangles, and the price has been tightening within those as well. So definitely a lot going on right now when it comes to potential volatility. You have a lot of things that are kind of coming together to produce this potential volatility. You have the triangle, you have the Bollinger Bands, you have the moving averages kind of squeezing together. There's just a lot going on to create that potential volatility right now. And as far as the other indicators go, they're all pretty neutral right now. You'll notice the RSI is sitting pretty much right at 50, and it has been for several days now. The stochastic weights, which is the indicator we created here, that one is fairly neutral. And then of course the MACD is also neutral as well, although it is yes, it is green, but just barely. So everything is kind of at a deciding place right now when it comes to Bitcoin, so it's hard to say which way it's going to break out. It's not very clear. That's because the price has been moving for sideways for so long that the indicators aren't clear on which way it will prefer to move. Although a lot of people seem to be leaning towards the bullish side just because it has moved up and kind of held relatively close to the highs that it created on this most recent run up ever since the Corona crash, and also of course because of the halving and other events as well. But I really think that the moving averages could be key here because they are forecasted to move up, and if they do act as support, will continue to push the price up and could be what we need to actually kind of get going here. And I know we have a couple people watching right now. If you have any questions, just let me know. I do this stream every once in a while. We talk about indicators and TA, and we actually create indicators here with Pine Script tutorials, with a whole bunch of videos on that as well. So if you see anything you want to ask about, just let me know. We'll take a look at it. And the reason I have this chart the way it is because I like to compare Bitcoin to the S&P because at times they are very correlated. Now recently there hasn't been much because Bitcoin's been going sideways and the S&P has been pretty volatile compared. But what I'm noticing on the S&P is that after I called right here that I was going to get out of all of my shorts, that it bounced off of that mid Bollinger Band, but you'll notice it crossed down under off the big sell-off, and there's been several big sell-offs apparently. That's just a statement of how volatile the S&P has been. Let me move this so you can see the indicators. But you can see it's been bouncing off the mid-Bollinger Band, plenty of wicks on the bottom side. It just looks very bullish, just the price action itself. But then we get to the indicators, and you can see that the stochastic is about to flip bullish as well if the price continues to stay up this high. The smooth RSI, the trend changed back up again, and then the MACD is seemingly accelerating in its growth on the bullish side. So there's a lot to be looking at here. I know it's pretty dangerous to think that you could be looking at potential new all-time highs on the S&P, but I don't know, it just kind of looks like with the price action and the indicators that it's going to head that way. And you're honestly not too far away. Now that we've had the golden cross, you're not too far away from having your 100 start moving up as well pretty quickly. As if you'll notice, the 100, the candles at the very end of it are back here, and they are still relatively low. And once you get rid of these candles that increasingly get lower and you start replacing them with higher priced candles more and more, and the difference is larger and larger, the quicker that moving average is going to start moving up. So you'll see that here in about the next 2 to 3 weeks, is that 100 period moving average is going to be projected to catch up quickly to the 200, and there's going to be a lot to look for. I'm actually going to draw this on the chart so we can come back to it here in just a little bit. This is where I'm going to be looking at, and I think it's going to have to do a little bit with this crossover coming up. And I'm usually a little quick on looking at these things and predicting these things, but we shall see. The circle that I drew a long time ago here is coming to an end, so I was a little bit quick on it, I think. Wow. It looks like we're coming up to a bit of a dump right now. That's not good. Alright, so let's zoom in. This is the 5-minute chart. It looks like a bit of a sell-off right now, which is unfortunate. You're going below the 200 on the S&P. Bitcoin's struggling. It's below all those moving averages again. We could be getting ready for an actual push down as opposed to this kind of oscillating price action that we've been getting. But I do want to zoom out and slowly zoom our way back into there. This is the 4-hour. You'll notice we do have this sort of inverted hammer type candle, which has a large wick on the top side. We have had 4 red candles in a row before that. Everything kind of has started to turn downward. We'll see if the 100 can hold here, but if it doesn't, then I kind of tend to lead towards the price dropping and heading down towards the 100-day moving average. Down to the 1 hour. This one is very interesting. I believe this one, out of all of them, might indicate that there's a drop coming more than any of the others, because it has went below key moving averages. It has tested them as resistance over and over, and this hour, the first 10 minutes, has been very red. We'll see how it finishes, but the stochastic, the RSI, and the MACD are kind of conflicting, but the MACD is down. The stochastic RSI is very neutral here. I wouldn't give it any signal, although the most recent one has it pointing down. It's been flipping every candle for the last 6 or so. And we have the stochastic weights, which actually has it still gaining momentum upwards, but that is due to the very low price on this candle here, showing that it has momentum upwards. But that really isn't too much of the case when you look at the actual price action. It's been very sideways for the last 12 or so hours. Zoom down to the 15, and this one looks really bad. Yeah, so man, I don't even know where to begin on this one. It looks like the MACD is turning. Looks like everything's about to be turning down just because of this one candle, and we'll see how this actually goes. But zoom into the 5 minutes, And this is the one we were looking at before. Momentum is pushing down just about on everything. Everything looks very bearish on the 5-minute chart. Although, what you do have to pay attention to anymore, due to the S&P and Bitcoin kind of correlating together, is the actual price action on the S&P. So if the S&P can hold its 200 average on the 5-minute, there might be some hope of maintaining this kind of sideways range on Bitcoin. And we go down to the 1-minute chart, and you'll notice that's just kind of a mess. We're not really getting any signals. Right now, I have a feeling we're going to be getting a possible divergence on the 1-minute, and I did not mean to draw on the chart, but I could see a possible divergence on the 1-minute happening here, wherever it comes back up to on the stochastic and back down. Seems very likely, and that's pretty impressive on the 1-minute chart. The RSI went from overbought to oversold in about 5 minutes. And you're getting a nice bounce on the S&P right now, so we'll see how that actually affects anything, although I kind of doubt it will. So let's go back out. Let's take a look at the 1 day. There's some other things I wanted to take a look at. First of all, I wanted to zoom in. You can see we're still above the mid Bollinger Band, and we do have some wiggle room below it. As it's been showing recently, it's been going below it and closing back above it just about every day. So where is that at? It's about at 9,200 even. So as long as we stay above 9,200, it doesn't look too bad on the daily. Now let's take a look at some other stuff. I'm going to leave that up and we'll just compare it to Bitcoin. Let's take a look at Ethereum. Now this one looks a lot better, and I need to take it off the drawing tool. Ethereum looks a lot better. It is trading above all of its moving averages. It does have momentum down on its stochastic. The RSI is starting to point down, and it looks like you're about to have a cross down on the MACD potentially. So I would wait to see if these moving averages give out, and if they do, I would imagine it breaks towards the bottom side of the Bollinger Bands here, and might touch that as well as the 100 moving average. Take a look at this on the 4-hour, see if we can get any insights on this. Very similar on the 4-hour, continues to look down. And let's take a look at this on the 1-hour. And similar to Bitcoin, this looks pretty ugly. Everything appears to be breaking down. Stochastic weights is still pointing up, but with a big red candle like this and the lowest closing price potentially, that, if it were to close here, would likely show it crossing down on the next candle. You have the RSI pointing down, the MACD down further, and of course it rejected off of these moving averages. So that one is something to keep an eye on. As I said, it's very similar to the 1-hour on Bitcoin, how it's bouncing off of moving averages as well. 15-minute on Ethereum, also very similar, although the stochastic is pretty interesting. I'm not seeing how it's staying flat when the price is down so much. I think we'll learn a lot in the next 15 minutes because it did flip red on that particular candle on the MACD. And all of the moving averages are forecasted down. And then on a shorter time frame, it's all very similar. And here's what I'm talking about. I'm thinking we're going to get another push down in price, and you're going to get a divergence here on the stochastic weights, and then you might have a quick scalp upwards, but we'll see. At least that's my kind of guess on what's going to happen. Alright, so now I'm just going to do some daily on some larger things. So I want to take a look at Stellar. This one has broke out here in the last week or so, and it appears to be coming back down. Hopefully we'll form a flag to continue that pattern upwards, because right now all the momentum looks down. On the weekly, it continues to look very good. It just had the crossover on stochastic weights. The only way that does not stay crossed over is if the price comes back down and is a bearish engulfing candle, and I doubt that's going to happen. Take a look at basic attention token. This is the weekly scale, and it appears to be losing momentum, but we shall see how that's going to work. We're still 5 days out from the closing, so it's got a long time to play out. So let's look at the daily. Momentum actually looked pretty decent for it until today. Again, everything's moving sideways, so it's really hard to give you much of an idea on how I actually expect things to go. But MACD pointing down, RSI pointing down, stochastic weights not too bad, but you have it trading above all the moving averages. So maybe we could get a touch on the bottom bands in the 50 here before a bounce again on basic attention token. Take a look at Link. Yeah, this one's just amazing. On the daily, it looks like it has momentum flipping back up yet again, but it never really stopped, honestly. That's just kind of how the stochastics work when the price comes down just a little bit, even for a day or two. But honestly, I think it could very well become very overbought before it stops and potentially reach $10. The weekly chart's even more insane, and I say that because it is just now overbought on the RSI over the last 2 weeks. Stochastic is just now overbought with the stochastic weights, and the MACD has a huge momentum divergence between the two of them. So it's going to take a while to slow down all this momentum, but I think $10 is probably going to be a key number for Link, just because at $10, that's a very big psychological number to break through for something that was priced as low as $1.47 back in September of last year. Let's get it back to the daily. See if there's anything else I wanted to touch. I wanted to look at Matic. I've been starting to follow it, and then also want to do MCO Crow, and I meant to do that on the other chart. And Matic actually looks pretty good. All the momentum seems to be pointing up on it, trading above all key moving averages. As long as Bitcoin and traditional markets kind of maintain, it looks really good. It looks probably the best out of the ones we've seen so far, other than maybe Link. And speaking of other ones, let's go to MCO on the daily. And this one's kind of interesting with TA, because you would have thought it would have continued lower. It's kind of nearing a support level. I was kind of expecting it to go down to 3.75 or so, but who knows. It is finding the bottom of the Bollinger Band here, and momentum seems to be kind of pointing up. So we'll see where MCO goes from here. But I like MCO. I think they just raised their rates on Crypto.com for their Earn program, so that's really good. That gives MCO a use case. The more MCO you have, the better earn rate you get anyway. So I have a feeling they're not going to let the price on MCO get too low. They'll probably try and offer you all kinds of incentives to get you to buy it more and more, and at a relatively low price, it's not too bad. It has a much higher trading history in the past. But its partner, Crypto.com coin, this one's still doing really well. If anything, it reminds you a little bit of Link, just in the fact that it keeps going up, except this one's more of a sustained, steady movement upwards, whereas Link is just really blasting through. So it's going to be hard to say what actually happens here. Again, to me, there hasn't been any reason for me to purchase this coin, mainly just because the risk to reward just doesn't seem to be there. It's a top 10 market cap coin, and I'm not sure it deserves to be there. So I'm not buying it regardless of what's actually going on with it. Alright, so let's get back to Bitcoin. You can see it is testing that mid Bollinger Band at 9,200. It might be getting ready to have a little bounce here as momentum on stochastic weights seems to be hopefully finding a bottom there, as it has been several times already today. But I'm going to take a quick break. I need to take care of something. I'll be right back. So, my apologies about that. I am back now. I had something come up, that happens, and what I am looking at right now, excuse me, is the potential short entry here if we do believe that the momentum was breaking and changing. I think my head's in the way, so I'll move this over. If you wanted to short expecting the price to continue to go down after this huge drop in price with the red candles on the 5-minute chart, I probably would have done it here just because it's a moving average resistance. So if it rejects off of that, it's probably going to continue down. Alright, so what I want to do now that we've looked at some TA, we're going to be checking on prices occasionally just to see if there's any actual breakout. But what I want to do is take a look at this Bollinger Bands indicator I've created and kind of show you how it's going to work. Well, it's actually a strategy, and how that is going to work and how we can use that as part of what we're doing here at BigBits, and hopefully sell this one in the future, because I don't know if anybody's doing anything quite like this just yet. So this is our fancy Bollinger Bands strategy. This is taking the fancy Bollinger Bands indicator that we've created on TradingView, and we are adapting it to be a strategy. And once this loads, and it should take a while to load because there's a lot going on, but once it loads, I can show you exactly why I think this is excuse me, what I'm going to use and call the fancy strategies, because we are going to have a ton of options built into strategies as opposed to building you a fixed strategy that you can't adjust. Part of what we do here with BigBits is we take these indicators that are very simple and we make them fancy, I guess is the right word for it. We add in a bunch of options to give you more control and more power over your indicators. And what we're going to do, and you'll see there's a bunch of settings here. Basically all of your indicator settings are up top, but I've added something new down here, and this is conditions required to open positions. And you'll notice there's no information in the strategy tester because no positions are being opened. So what I've done is I've made it to where you can choose what conditions you want and what you can use them for on your strategy, and if it meets all or any, depending on how you have it set, it'll enter into a position. So to open a position, let's just say that on the crossover of the middle band, we'll open along, and we will close along with the cross under of the middle band. Okay, so now you have a strategy that buys when it crosses above the middle Bollinger Band and closes when it crosses below. Now, let's see, we can also require that when it crosses under the middle Bollinger Band, that the price has to be above the lower band. So I don't know why you would do this, but this is, we're going to require that both of those are true. And if it made a difference in the strategy, it would have adjusted how this actually works. So let's do one that I actually kind of like here. And I actually like to use the %B, and let's do 0.6. I want the %B to cross over the %B value 2 to open up a long. So this is how we're going to know to open up a long. You'll see it does it here, and the %B is just the percentage value within the Bollinger Bands. So like the bottom of the Bollinger Bands is 0, the top is 100. If you go below it, it's a negative percentage. Above it's anything above 100. So we're going to open longs when we go above it. Then we will also close longs when we cross under the upper band. okay? Or, and that's why we have any, or if we cross under the middle band, and it's the wrong one. Here we go. So now you got two different entries and exits, and you can see it's probably not the greatest combinations of settings here because the results weren't too spectacular, but you did make a 9.68% profit. And if you know what you're doing, hey VJ, how you doing? I'm doing great, man. But if you know what you're doing with the Bollinger Bands, you'll be able to configure it however you want to. Now, the goal here is to make this as flexible as possible. And then we also do this with the moving averages indicator. And then we merge the two together so that you have all the conditions and strategy options from both of them all in one indicator, and you can pretty much do whatever you want as long as you have you're using a moving average and Bollinger Bands. Now I'm also thinking about trimming some of the options to where you're not using different resolutions and things like that, but I'm not entirely sure about that. So for this one, we're looking at a daily chart. Let's take a look at a 1 hour chart. So this is going to impact the strategy quite a bit, but now instead of doing a 1 hour Bollinger Band strategy, we'll have a 1 hour candle chart, but we're going to change our Bollinger Bands to use the daily Bollinger Bands. You can see there's a bit of a difference here on how it's going to actually execute the strategy, and you'll see it can execute within the day now as opposed to waiting, and it's actually a little bit better than if you were to have chosen this strategy on the daily chart with the 4 hours. So let's change this to 4 hours, and this is actually worse. So you can get an idea on how this is actually going to work and how you can impact your strategy and use these options. So I just kind of want to play around with it now. I haven't went through all of the strategies. And VJ, this one is one I'm working on. This is the fancy Bollinger Bands indicator. If you want this indicator, you can actually find it in the public library. So you go to public library and you can just type in the word fancy. You can see all of my big indicators that are on here, but the fancy Bollinger Bands. This indicator is on there, but what we're working on right now is a strategy built on top of that indicator with tons of options on how you're going to enter and exit positions. And one more thing that I want to add onto this particular strategy is, instead of just saying, you know, all of the conditions must be true or any of the conditions must be true, I also want to add in an option to require that a certain number of the conditions are true. So what we can do is we can have 3 conditions and require that at least 2 are true. So that, in that case, it would not meet the definition of all conditions being true because it was only 2 of 3. But since you want 2 out of 3, it wouldn't meet the conditions of any. Well, it would meet the conditions of any, but it's not precisely the same thing. You want 2 out of 3 as opposed to just 1, and that's what any would allow. So if you wanted 2 out of 3 conditions to be true to enter any long, we can enter in a certain amount of conditions that you want valid and basically just check to see if the number of conditions you want is accurate, and then you can enter into a long or short or whatever in that particular way. So this one's pretty neat. I like playing around with it, and since we are playing around with, let's just play around with some of the settings here and see if we can get anything better. Okay, that's the mid Bollinger Band now. So it seems like it would do a little bit better on the mid Bollinger Band, but let's play around with some of the crazy settings here, like the band smoothing. This one's kind of wild. You don't see this on other charts. Maybe for good reason. Huh. Interesting. Not sure what that error was about. You can actually smooth your bands out here if you wanted to be a little bit pickier on what's going on. And let's just try something different. Hopefully it'll actually work. I don't know why it wasn't working before. So there we go. Now we've got the whole moving average working. That's what I want to see. Let's smooth that out to 8. Then let's go and drill back down into the 1 hour chart. That actually made the 1 hour chart act a little bit differently here. So now the bands are slightly different, and we'll use a different Bollinger Band to begin with. Let's use the whole moving average on the Bollinger Band itself. Hey, there you go. That one's pretty good. 26%. I think that beats the buy and hold. Yeah, like 0.3%. So yeah, you beat it, but not by much. And that does include fees on the strategy itself. I want to change the middle band up a little bit and see if we can do anything different with it. Let's try something a little bit longer. There you go. Longer one seems better. Let's try 35. Nope, that's too long. Let's go back down to 30. So it seems like 20 something around there is the best Bollinger Band using this one. We'll just leave it to 20 and just play around with some different moving averages. So let's try the double exponential. That one's bad. Let's try triple. That one's actually good somehow. Volume weighted moving average. One seems to be okay. Kind of like that. Let's slow that one down. Yeah. Maybe not what I expected. Get this back down to 20. And let's try the RMA. That one's awful. Weighted moving average. Hey VJ, yeah, you can say whatever you like. Yeah, if you want to try anything on here, that's fine as well. I'm just kind of playing around with things. Let's actually use average true range and make this Keltner channels. So this is essentially a Keltner channel strategy, but let's switch back to the simple moving average. Not terrible. So the whole moving average seems pretty good. It seems like it works with the Keltner channels and with the Bollinger Bands as well. Let's see how it did with the buy and hold. A little bit worse, but I guess that's to be expected. So actually, I want to switch back over to our Bitcoin chart that we were looking at. It is below now the midday Bollinger Band, and let's actually show you that. Just barely, but it is. And it's looking more and more like it's going to break down. Zoom into the 4 hour. It's below the 100. It's only got 8 minutes left. This thing could really take off down pretty quickly. I don't think people expected it to break down, but it might. It looks really bad. Yeah, Bitcoin doesn't look very good right now. Pretty much everything is pointing down, and if it breaks down, it's probably going to be pretty bad. But if it does break down, you're going to hope for a fake out and it come down, touch these bands in the moving average, and then pump the other direction. Let's go with a 15-minute as well. That one's not good. It really does look like it could really slide here, and I want to compare it to the S&P because we've been watching that together with it just to kind of compare the two. The S&P is not looking too great. Let's see, did it hold its Bollinger Band? What was it on? With the 1 hour, I think. Yeah, it's below its 1 hour. And it has momentum looking down as well. So, I don't know. I'm not too thrilled about the way that's looking. It looks like Bitcoin's probably going to continue down. But how far is the question? Will it actually break out of that range or not? If it closes this low, it's going to be below all 4 moving averages on the 1 and the 4 hour. So momentum looks bad on the 6 hour. Although you'll notice here, it looked very similar. And it did continue down, but it turned around pretty quickly. Pretty much everything looks bad. Except for the daily, which is pretty much neutral. But what about the exits on that indicator? So we were using any of 2 conditions on the fancy Bollinger Bands. The way we had it set up, let's scroll up here. On the close conditions requirement, we had it set to any. So any condition we tell it to use for a long close could trigger it to actually close. So we actually use a cross underneath of the upper band and a cross under the middle band as well. So those are the 2 conditions that would close it. Either one of those. So in that case, let me zoom back out here. So for example, zoom in a little bit. We entered along here because it crossed over the band, and here we closed it because it went below the upper band. And then there it crossed underneath of it, and the entry is probably not ideal. I think we're using the %B too high. Okay, yeah. So yeah, it's exiting where we anticipated to. And remember, we're using daily Bollinger Bands with a 1 hour chart, so it's a little bit different than actually just trading a daily candle. I'm sorry, I keep going back and forth between different charts here. That's because I'm trying to look for when there would be a good potential entry on a short. And I know you can't really see this one too well. Hopefully I can move it into your frame here. This is the 5-minute on Bitcoin. And like I said, we just went over all the charts, and if it is going to be a continued trip down, you're probably going to get a short entry and around here, but it's just not moving at all. Your best bet probably is just to wait for the actual breakout and then trade it, as opposed to trying to catch anything right now. These moves are so small. I mean, it looks like a big move, but it was only like $40 against 9,200, so that's absolutely nothing, you know. All right, so you might be getting that opportunity now, as it did come up to where I told you it hit a moving average on the 1 minute. I could see it going down from there. Alright, so we've talked about the Bollinger Bands thing and some of the settings that we're going to have added onto this strategy, which I haven't sat here and counted all the settings, but it looks to be about 40. That's a lot of stuff going on. We're going to add at least 2 more for sure, and we might add a couple of more as well. So %B is pretty useful for a lot of different things. The Bollinger Band width, not so much with what we're trying to do here, but really just giving you all these different settings is what it's all about, so that you can build your own strategy without having to have somebody build you one specifically for you. You can take the one that I build and you can customize it to work for however you want. So that's the goal here, and I think we're coming a long way on that. I'm trying to think if there's anything else we could possibly have in a Bollinger Bands only strategy. So we have band crossovers and unders, we have price crossovers on the bands, we have, well, that's what that was, excuse me. We have price above or below bands, then we have Bollinger Band width with crossovers and bandwidth above values, below values, and the same thing with %B. I'm trying to think if there's anything else I could possibly add on top of a Bollinger Band strategy, and I'm not sure we can. There's probably some other Bollinger Band related indicators. Trying to think. Let's just check the public library and see if they've got any. I'm just trying to check for some of the more popular ones to see if they're anything different than what we already have. Triple Bollinger Bands. I just want to see this one. What in the world? That's interesting. These are probably just different deviations, 1, 2, and 3 most likely. In fact, let's find out. We have a deviation multiplier on our indicator. Let's just reset it. Yep, that's what it is. So, go ahead and hide this. That's standard 2 deviations, and it lines up with the yellow line. And if we change our deviations to 3, let's change the upper band to 3 and the lower band to 1. That way we can compare both of them. So yeah, now our upper band matches their upper band, and our lower band, which is 1 deviation, matches their innermost lower band. That's pretty cool. I don't see how that indicator has more likes than mine. I think mine just needs some more exposure so people can actually see it. Okay, so back to trying to find some more. Gunbot BB Step Gain Tuner. This one is private. Interesting. So this one's got 7.5K. Let's check this one out. That one's interesting. Huh. I can't really tell just by looking at what they're doing. Obviously, they're combining the MACD and the Bollinger Bands together, but how? I'm not entirely sure. I could look at the source code and tell you all, but that wouldn't be very entertaining. I did want to take a look at one that I saw recently that we could easily recreate. This dude's pretty popular too. This one's by Moon Overlord. It's pretty popular on Twitter. It's got a ton of followers. I forget. Let's see. Yeah, almost 70,000 followers. And this is the indicator he released. Closed source. This is something we could do pretty easily. And what you're doing here is you are basically giving people options to show whether, well, basically what the day of the week the candle was on, and going back throughout a certain look back period, you can see how many candles were green and how many were red, and it'll tell you how many bars are on the chart and maybe some more information. I'm not entirely sure. I'm not sure if he added anything else to it, but that's all I've seen. This was pretty easy to do. There is a time of the week function, and if y'all wanted, I could probably just recreate this in like an hour if anybody wanted to actually have that without actually having to contact that guy. And in fact, I might do that at some point because I think we could add more to it and make it better. So, I'm not sure if you all were watching a few minutes ago, but if you remember, I told you that might be a good point to enter into your short if you wanted to get back on that, and if you missed that entry, that one might have been pretty good, but I don't know. Starting to have some momentum flip here. Stochastic weights, though, this sort of jagged action is not very friendly. So, like I said, I'm waiting until there's a breakout before I even consider a trade. But if I were forced to, that's where I would have looked for a short, and I told you as much about 10 minutes ago. We'll see. I think the price is going to drop, but we'll see. It's such a mess right now. That's exactly why I'm waiting for the breakout. I can't tell you which way it's going. All right, actually, I'm kind of bored, so I think I will try and recreate that indicator. Not really bored, but I want something to do real quick. Call this one candles. Overlay equal to true. Let's plot the close for now because we have to have a plot, and then let's see. Does that return a string? That's an integer. Okay, so that's not too bad. So we can get the candle count really easy. So what he's trying to do with the candle count is probably one of the easiest things you could do. So on your candle, is your close greater than your open? Okay, if it is, we're going to set a variable to 1. If it isn't, it's going to be 0. And we're just going to call this variable is green. And we will do an is red. And we're going to leave is green to greater than or equal to, just in case the price doesn't change. Or actually, we're going to leave it as just greater than, because we're not actually tracking whether or not the candle is actually red or actually green. If it stays the same, we're not too worried about it. We can always go back and change this definition, or we can set it to whatever it was before if we needed to. Alright, so actually we don't even need to do that. The max bars back, we can set an indicator to use as 5,000. So we're going to do that. Then let's go ahead and plot. Actually, let's set the overlay to false, because this isn't going to look too pretty. Let's just plot the total number of red candles. And then let's also plot the total of green candles, and then let's color those so that we can tell which one's which. And then let's save this as something. Candles crawler. Call this the candle walker. Alright, so what did we mess up? Max bars back. Alright, I'm not too worried about max bars back right now, because we're actually using cumulative, and it can only go the max bars back anyway. Study. Alright, let's try this. Okay, that's saved. Let's add it to the chart. So now you can see how many green candles there are to red, and let's just make sure that it actually iterates correctly. Alright, so we can tell by the volume here. We don't have to actually look at the candles themselves. So this one's green, 910. This one's green should be 911, correct. The red should increase the red to 744, correct. So there you go. Let's actually take this to like a 1 minute chart just to see how high these numbers actually get. So wow, cumulative goes back more than the 5,000. So this looks like it goes back all of the bars we could handle. And I do have a premium account. So cumulative pattern syntax, it's CUM. I just found this one yesterday. I didn't even know this was in there until yesterday. Cumulative. We're just adding up all the red candles in the entire history here. It's a sum of all of the elements that you specify. So instead of using sum and specifying a look back period, this just goes back the entire history of the chart. Could there be any option for weekly or monthly candles to be seen also? Why not? Are you talking about the Bollinger Bands indicator? I'm sorry, I might not have been looking at chat when you said that, but if you're talking about the Bollinger Bands indicator, yeah, it can look at whatever resolution you can have on TradingView. If you have the chart set to that, now it does have some built-in resolutions that you get to choose from, that if you're wanting to use it on a different chart resolution than what you're wanting to specify in the indicator, you couldn't select it at that point, but it just kind of depends on how you plan on using it. Okay. So let's try to make sure that if the current candle, if the close is equal to the open, then we'll set this stuff to. Then if the previous candle So if the previous candle was green, the current candle will be green if they were the same. And then at that point, your only other option is red. Let's look at our total values here at the end. 10, 480, 1124. Yeah, so that actually made a huge difference on the 1 minute chart because there were a lot of them that were exactly the same. And if you assume that the closing price from one to the next is exactly the same and it continues to have the same color as the previous one, then that's what would happen. I'm trying to find a good example of this. Open and close, 03. So on this, I think it actually, I'll have to figure out how TradingView actually does this. I've never really paid attention to candle colors on candles that have the same opening and closing value. But this one's green and the open and close is exactly the same. For some reason, oh, it had a low? That could be perhaps why. But did it though? Yeah, I guess so. Alright, yeah, I'll just need to figure out more to make sure that's accurate, but that's easy enough. So now we have our candle count. Day of the week. Let's figure this one out. Let's also plot this, but actually let's just hide those so we can see what's actually going on. Yeah, that makes sense because we're on a 1 minute chart. Let's go back out to day. So today is Wednesday, so that would be like the third or fourth day. So we're at 3. Okay, this is the 4th. Okay, so today's Wednesday, Tuesday, Monday, Sunday is 1. So all we have to do is get that value out of there and get the text. I gotta remember how to do functions. I never do these hardly anymore because they're already written for me. I just copy my old code. And actually, I don't need to do that. Let's go to fancy Bollinger Bands. Save this first. Of course. It's gotta actually work. And yes, so this is how we do the function. Good. It's pretty sad I forgot that. And I do tutorials about this kind of stuff, but it's just how it is. If you're a developer, you don't need to remember anything that you shouldn't. It just takes up space in your head. So actually we're just gonna have the first letter capitalized. A. I'm just gonna copy this all the way through 7. We can change the format later. Three, 4, 5, 6, 7. That worked out really well because I wasn't paying any attention to how many I was actually doing. So actually what we're going to do here, we're going to clarify whether it's Tuesday or Thursday. Actually I'm not, because then I'd have to do it on Saturday and Sunday, and I guess I could. And that's capitalized. Let's do this, save it. Then need to find an example of a label. Bands has a label. Yeah, okay. Then here. Steal some of my other stuff. Give it a title. Then we'll have our first value here, which is going to be green candles. And we already so I'll have to do that. Hopefully this will work. Day is gonna be simple enough. Let's try this out. What is the name of the Bollinger Band strategy? Like a lot of the other indicators that I'm doing, they are named fancy. So if you go to public library, you just type in the word fancy and you'll see fancy Bollinger Bands, BigBits.io. That's the indicator that the strategy is based off of. I haven't published the strategy yet. If you follow me on TradingView, you'll probably get a notification when that comes out. I'll publish that one privately. We're going to be selling access to that one because it's very, very complicated, and source code is going to be protected on that one. Alright, so set Y, close. Alright. End of line. Okay, you know what? I'm not even going to set Y. Okay, so I've missed something here. Where have I messed up? Oh boy. I just gotta remember how to get the text on the or get the label to actually show up correctly. So let's set our overlay back equal to true. That way I'm not having to search for this anywhere else. Now I'll try and add it. It's added. I'm probably messing something up here. It might not like that in the toString. Let's try saving these as a float first because it might not like the data type. Why did I do that? That's a bad habit. So let's just remove the total candles and stuff for now. Let's just settle with this one. I'm obviously forgetting something very basic here. Okay. It's up on the other screen because I've got some code I can reference that should make this a little easier. Now I know what the issue was earlier. Jeez. Okay. Just gonna replace that one entirely. And we're gonna set this to close. This is gonna be day. This one's gonna be just right. Get it? Just right. End of line without continuation. What have I done? Okay. Spacing's off. That's what it was last time. Okay. There we go. Okay. So we need to delete the old one now. Or I guess I could set X. I never used that. Yeah, screw it. I'll just delete the old one. And I guess this needs to be left. Make it easier to read. There we go. So today is Wednesday. And then let's add in just to see if this part works. Yep. Nice. Forgot our plus sign. Forgot to concatenate our string. So there you go. We've pretty much got this. We just need to add a little bit more logic to it. Separate out some of the labels. And then you'll have this wonderful script reverse engineered. But I don't know if I'm going to actually share it or not. That might be kind of cruel. I imagine there's probably some other stuff like this out there. It's easy enough to make. I'm surprised this is private. Let's see, I think that I'm gonna take a quick break and I will be right back, guys. I need a moment. Alright, I'm back. Fox Pat. I'm not going to be around too much longer, so I can't really help right now with setting something like that up. I'm getting ready to take a much longer break in just a moment. I'm going to set up the tutorial stuff so that it'll play. For the most part, the stream's over. For like the active session of it, I like to, after I do this part, play some of the tutorial videos, do a replay of the tutorial videos so that people coming to the channel or stopping by in the live stream can be made aware that we do have these Pine script tutorials, and the stuff that you've seen on the channel so far where we kind of recreated that one dude's private indicator for some reason. They can see how to actually do that themselves by checking out the channel, so it's kind of like a little bit of self-promotion. So I am going to mute myself, mute the music, and we're going to transition over to the tutorial videos. Thank you all for stopping by. If you have any questions, leave them in the chat. I'll probably check on the chat pretty often, so if you have any questions, I can check there, but I can't be too active for the rest of the day. So thanks again for watching. You all have a good day. Next iteration of the scripting tutorial, and that is scripting tutorial 3, and we are going to be discussing triple mini moving averages. And that sounds kind of confusing, but essentially all we're doing is we're having 3 moving averages plotted on the chart like we did before, but instead of having the moving averages fixed as being either a simple moving average or an exponential moving average, now we're going to have the ability to change which type of moving average we use for each of these lines. So I'll go ahead and show you the end product here, and you can see, of course, the 3 lines, but the big change is in our inputs on our settings is for each moving average. So for moving average 1, we can change it to have a different type of moving average. Let's have it be an exponential moving average. You can see that it changed, and since an exponential moving average usually follows price a little bit more closely than a simple moving average, you can see it's a little bit closer to the actual price. Let's go ahead and change it back for the video, and we can go ahead and discuss kind of what we've done. Now, the first thing you've noticed, obviously, were the inputs. How did we have it set up to where you could select whether you're going to use an SMA, EMA, RMA, or WMA? Now, if you've watched the last videos, you know that the inputs are handled by storing a variable with the result of the input. Now, the inputs that we're using are defined by an options array or a dictionary, whatever you want to call it. We're using options. Now let's go to the input documentation. And you can see the options parameter here. This is useful to provide users with a list of constant values they can choose from when using a dropdown. So for example, in this documentation, the options you would have in the dropdown are A or B, and it shows you how to use those values here. So you can see that choice was assigned to the value in the options list that you defined. It's pretty simple. So in our case, we have 4 different moving averages we're working with right now. We have the RMA, the SMA, the EMA, and the WMA. Now, we had to store a moving average type for every moving average that we have in the list. So we have 3 moving averages. So we need 3 types to be stored, 1 for each moving average. So this is the moving average type for MA1, 2, and 3, and so forth if you wanted to add more for whatever reason. Now, that alone doesn't make it to where it will actually change what's plotted here. We actually have to tell it to calculate the correct moving average to display the correct data. So for example, if all we did was just change and add this input, if we changed it from SMA to EMA, it would still show the SMA lines and there wouldn't be any difference. In order to make it to where you do change it and it will recalculate those values, you have to actually do the logic to where it'll look and see which moving average it's supposed to use and use the appropriate moving average calculation. Now, I'm going to expand our code here so maybe it's a little bit easier to see. We're going to start learning how to use logical conditions, and the most simplest logical condition you can use in just about any programming or scripting language is a simple if statement. Basically, you're checking to see if a certain condition is true, then you will do a certain action. So for example, if our MA1 type is equal to the SMA option that we defined, then we're going to run the SMA calculation based on the close, which is the current price, and the amount of look back period that we wanted to use. So for MA1, the default was 50. Our MA1 type was SMA, so it would check our MA1 type was SMA, yes, so it's now going to execute the SMA calculation using the close price for all of the candles that it's using, and it's going to look back 50 periods to calculate the SMA. Now there's something in here you may not have seen or be familiar with other languages, and this is, in my opinion, fairly unique to PineScript. I haven't delved into tons of different programming languages, but for the ones I'm familiar with, this is kind of different. So in PineScript, you can set your variable value equal to the if statement. Now what's going to happen is your if statement is going to return a value, and it's always the last function or expression that you use is returned back. So in this case, setting the MA1 value, which is where our green line is dependent on what the last function is that we call here. So when we calculate the SMA here, it sets the value of MA1. Now, if you're not too familiar with coding, you'll notice this looks really similar. You know, are we setting MA1 equal to if? No, we're setting it equal to whatever the condition is that gets executed last in this if statement, this nested if statement, I guess you would call it. But you'll also notice there's just one equal sign here and 2 equal signs here. Now that's because here we are comparing MA1 type to SMA. You use 2 equal signs in PineScript to do comparisons to see if a condition is true or false. So if we did less than, the condition would simply be that. And then it'll tell you whether or not the MA1 is the MA1 type is less than that. But that doesn't make any sense. We're comparing strings there. But just to give you an example, we're comparing the type to the string here, and if they're equal, then it's going to execute this. And it did. And the single equal symbol, that just means we're setting the value. So whatever is on the left, we're setting that value to whatever is on the right. And since it's an if statement, it's whatever expression gets calculated. I know I probably rambled on a bit about that, just trying to explain it for those of you who were interested a bit more. But essentially, it's doing what we want. We're setting the MA value of MA1 to the calculated value based on whatever moving average that we have selected. Now, we continue to do this for our other moving averages as well, MA2, and we make sure to use the correct MA type. We got to make sure that we replace MA1 with MA2 here to make sure it's comparing the correct moving average type and no longer still using MA1, and also with the periods as well. And then you continue to do this for your other ones, and now you can plot your moving averages that we set with our logical if statements. So there actually was quite a bit of work here if you're new to programming or scripting to understand what's going on. Now, do keep in mind with PineScript, you have to get the spacing and the indentations on each of these lines after the if statement absolutely correct, or they won't execute correctly. That's kind of what I've learned. So when you run an if statement, the next line I believe has to be 4 spaces in or so, but just using the tab, just using the tab key will take care of that, and it'll give you the correct spacing. If your next line isn't at the correct spacing beneath the if statement, it won't execute. So you'll notice every if statement, the line that we want to execute as part of that logic is always indented by 4. Now, when you want to end your if statement and do something else, the else statement needs to be directly below the if or at the beginning of the line. So you can see here, it's not directly below the if, but it's back at the beginning of the line. And these need to be done correctly. From what I have learned, that may not actually be the case, but I do know that it works perfectly well, just like this. So do keep that in mind. All right, so that pretty much takes care of this indicator. If anyone has any questions, please let me know. If you like this video, please leave a like on the video and subscribe, because we are doing several more. I'll go ahead and I will show you. Well, first of all, I'll show you the if statement here. The documentation is in the code. You can get more information about how it works here. But let's take a look at my profile. I want to show you the scripts that we've done and we are going to be covering in the videos. Let's go back here. Let's go to scripts. You can see we've gotten 6, and I've already started working on a 7th at this point, and we're going to continue doing more and more as time goes on. So if you're curious, please check out my profile on TradingView. It's going to be in the description of the video. Make sure you subscribe to YouTube here so that you can get updates on this series if you're wanting to learn more about calculating your own indicators. You can always take what you learn from this series and apply it to other ones as well. So I definitely appreciate everyone for watching. Thank you, and see you in the next video. Hey, this is David for BigBits, and in this video we're going to take a look at the plot function on TradingView, specifically take a look at the show last property as well as the offset, which is kind of out of view here. Let me take myself off the video and we'll go ahead and get started here. Okay, there we are. Now, you can see we've added an offset here, and I'll explain exactly what this does. But when you're looking at the chart here, you can tell we're using a moving average. This is a new indicator I've created. It's already published out on TradingView. You can go check that out in the library. You should be able to go to the public library and search for fancy moving average. There you go. It's one of the few ones out there. It might not be registering in the public library just yet because I did just post it a few moments ago. But by the time this video is out, it should be available to everyone there. As you can see, it is a published script here, and you will have access to that as soon as it's available in the library. They probably just need to index it at TradingView. But you can see this is a moving average, and if you followed along with the video series before, you'll notice some other features such as the forecasting here at the end of it, but you'll notice something kind of new. There's one line, but it's got 2 different colors. But instead of just changing colors when the price changes direction on the moving average, say when it goes down you would have a red line, and when it goes up you would have a green line, which a lot of people do. I wanted to do something a little bit different here, and I wanted to highlight just the candles that are being shown, or well, of course they're just being shown, but I wanted to highlight just the candles that are being used in the calculation for the moving average. So for example, we have a 50 period simple moving average right now. And if I change this to 75, you'll notice it should go back to somewhere around in here, I believe, maybe further. Yeah. So now the green portion of the line goes back further because those are 75 candles back, and that just shows the latest candles that are included in that calculation. So that moving average calculation starts with the candle back here all the way to the current candle, which could be pretty helpful, and it kind of helps you understand the forecasting as well. So you can see when this candle leaves, that's why the forecast is going up. It was a red candle. The price stays the same. It gets replaced with a higher price here, so it'll go up. That's why the forecasting is in there, just kind of give you an idea on this end, but you can also get a better idea on the back end, so you can even think out further ahead than the 5 that are given to you in the actual indicator. Now, if you've been following along, you probably want to know how that's done. If you don't really care about how it's done, just go ahead and check out the TradingView profile, BigBits.io. Like I said, it's already out there. Now, we've copied over all of our other functions for the resolution, the moving average, and also for the forecast and the bias. Now, one thing you'll notice that we do different is we calculate one moving average, but we have plotted up to 2 different moving averages. Now, the way this works is we calculate our standard moving average, which in this case is 75 period. I want to move that back to 50. Okay, I think it's a little bit easier to see when that line isn't being covered up with candles. But we have a 50 period moving average, and the show last feature, and let's take a look at the documentation here. The show last feature allows you to only plot or show the last however many bars or sections on the x-axis that you would like to go back. I don't know why I said bars, but yes, it is points on the x-axis backwards that it would show when you choose show last. You can see here the definition. If set defines the number of bars, so I guess bars was the right choice of words there, from the last bar back to the past to plot on the chart. Okay, so you get the idea here. Hopefully that can move out of the way. All right, so we're plotting 50 back. You can see if we have chosen in our settings to highlight the inclusion, and I'm just kind of calling this the inclusion period because these candles are included in the calculation. We have the highlight inclusion selected. If it is selected, then it's only going to show the last 50 candles, which is our MA period. Now, if we uncheck this, it's going to set show last equal to 0. And what that does is basically means it's not a valid number, and you should show the entire history. Now, also when it comes to that, we also have the other line, the shaded line. I'm calling that the ghost trail. And this should only show up when we are showing or highlighting this inclusion period. That's because if we had it show up as well here, then it would shade the green and it would still look like there was a trail on there. And you don't need a trail when you're not even showing the inclusion. So what we're going to have to do here is we're going to have to add a couple settings. So we're going to have to add a button to show the inclusion ghost trail, and for that a toggle, I should say, or a checkbox. And when you uncheck that, you can only see what's included in the candle calculation. Why you would want to do that, not entirely sure, but we gave that to you as a setting, and you can see, if you wanted to, you can see the ghost trail, which is the entire price history of the moving average that's available. So how do we do this one particular line? So you can tell that we are only showing this green line for the last 50 candles. So how do we show a line on the chart that goes back and actually stops right here? Because you can tell it doesn't overlap with this green line, because if it did, it would be shaded a different color. It wouldn't be the lime green color that we set it to. So we have to make sure that we only plot this line when we are showing or highlighting this inclusion. So only when we are showing the candles included with the green line, and when we have the show ghost trail selected, which is basically just show this line. And to do that, we are going to plot on the chart the moving average we've calculated, but we're going to go back and we're going to look back 50 in this particular case. The period is 50, so we want the moving average 50 periods ago minus 1, so it'd be 49. And that's because it's a zero-based index. It starts at 0. If we want to actually go 50 back, we need to go 49 back in the array. That might not make sense if you're not a somewhat experienced programmer, but it's a pretty basic topic in programming. Basically, you start counting at 0, so we need to go 49 back to get to the actual 50th moving average. And if none of those are set, it's just not going to show the line. We've already discussed that, and I've shown you that just a moment ago. To get it to look like this, I just set it to black and set the transparency to 10. Now, we're also working with a new property here. I'm not sure we've used this in our videos yet. For the offset, let's go back to the plot documentation. Offset, it's pretty easy to figure out. It shifts the plot to the left or to the right on the given number of bars. The default value is 0. So our green line here has a 0 offset because it's not been set, and you can see it's plotted on the most current line. It's not offset to the left or to the right. You see this one is offset to the left. Now if we didn't have the offset, then this particular line, the gray line, would also end at the current candle, because we would just be plotting the moving average of 50 candles back. If we also don't offset it backwards, then it won't show up correctly in the correct location. So to do that, we go back our 49 and we multiply that by -1 so that it offsets to the left. If you have a positive value there, it's going to offset to the right. So we have to offset it back 49 to get it to do the correct line. And I would have done 50 here because it's not necessarily in an array and it's not 0 index based. But what happened if you didn't do that is that these lines would not connect, because it would plot up to here and there would be a gap and it would be here. So I left it at 49 on this one, even though it's not 0 indexed, just because I wanted them to line up and touch each other. And that's all there really is to that. So that's pretty much all there is to this particular video. I wanted to highlight this feature that I've come up with to only show the candles that are included, or basically highlight those that are included in the calculation for the moving average, and then also show you the past history of it, and then kind of explain how we did that with the show last and the offset feature. So if you like this indicator and you want to add it, I've already mentioned you check out my profile. There's other indicators and things on there as well, so make sure to check those out. If you like the video, please like, and if you like these types of videos, please subscribe. It helps me a lot, but you'll also get to see all the other videos we're doing. Especially if you like this video, go back and check out the other videos in the series so far, where you can kind of follow along, and all of this other stuff that I didn't talk about would be on there as well. And it looks like we just got a Brave advertisement while we're doing this. That's okay. I support Brave. So yeah, that pretty much covers everything. So just like and subscribe, and that's about it. Thanks. Have a nice day. Hey, this is David for BigBits, and in this video we're going to continue our TradingView Pine script development, and we are going to take a look at a couple of different things that we haven't before. And we are going to look at an indicator that I've published, and it isn't part of the series that we've done before. It's actually its own indicator. It's called volume effectiveness, and you can actually find it in the public library. There you go, volume effectiveness. And what this indicator does, and the reason we're using it, is because it works with volume, something that doesn't really chart well with the price. In the past, we've just been working with moving averages. So in this video, we're going to work with volume, which doesn't really overlay well with the price. You can see all of it's down here. It kind of looks good for this particular chart, the way we're using the volume, but we're going to be working with negative numbers with our particular volume indicator. So what we're doing is we're actually setting this indicator not to overlay on the main chart, but it's going to be its own kind of chart here. So that's one of the things we're doing, and of course we're working with volume. Now, what is this indicator all about, and why did I make this particular indicator? I made this indicator to help you measure the effect a single unit of volume has on the price. Now, if we zoom in here a bit, see there's a really large candle here. This is the actual volume on the candle itself. But you can see, compared to the next candle, the effectiveness of that volume is much higher. That's because the price increased more with less volume than on the next candle. I hope that makes sense. Essentially, for every Bitcoin on this particular chart, the Bitcoin USD chart, for every Bitcoin that was traded with this amount of volume, this is the percentage of price it was able to increase the price on the daily candle from open to close. So from our open price here, considering all of the volume throughout the day, this is where it ended up, and the effect, of course, is that change divided by the volume. And why does that matter? It just kind of gives you an idea of basically how much the volume is. It kind of gives you an idea of how stacked the order books were just at a glance. It may or may not be useful, but it is a good example to show you how we're working with volume and how we're showing you these particular non-overlaid charts. And you can see we can actually kind of pick up on the trends by smoothing these averages out. So it sounds like it may or may not be useful when you're just describing it, but when you look at the chart, we're actually able to plot it out to where it's actually kind of useful, and you can kind of see that it aligns pretty well with the price movement, and you can take it and use it as part of whatever suite of indicators you have to try and figure that out for yourself. But as part of the tutorial, let's go ahead and get into the actual script here. We have all of our other things that we usually have in the other videos. The first thing you're going to notice different really is we have to set the overlay equal to false. This is what makes it its own little chart here instead of overlaying on top of this particular chart, the main chart. I've also set the precision because although with Bitcoin on Coinbase, these percentages are just fine at 4 or 5, but other coins, other trading symbols, the percentage movement on price per volume would be much, much lower. So that's something to keep in mind. But since the chart is relative, it doesn't really matter what the scale is over here. It could be 8, 9, 10 zeros or more in percentage points, but when you're looking at them comparatively, you can still kind of get an idea of what's going on. Now, we've added a few features in here. Let's go ahead and take a look at what we've done. We've made it to where we can hide or show the bars. So now you can just kind of see the trend, and we can hide or show the smoothed moving average. We can also adjust the moving average period, the type of moving average, and we can also set this to where it's going to be an absolute effectiveness. Now that kind of just disregards whether it's a red candle or a green candle, and all of the values are positive. This is how much effect the volume had just in general, regardless of direction of the price. I'm going to turn that off. I don't really care for that too much. And we're going to hit OK. Now, I've already covered how to do inputs and everything like that. So if you don't know how to do that, go back to the other videos. I did create this section that pretty much does all the logic for us for calculating the effective volume. I've already told you we are going to use the close price divided by the open, and then we're going to subtract 1 from that, and then multiply it by 100 to get the percentage change. Okay, so this right here, just so you're clear, this is calculating the percentage change for the day, and then we just divide that by the volume for the day. It's really simple. On this particular calculation, we're using the absolute value. That is what gives us these values. It's the same thing, it's just if the number was negative, now it's positive. That's pretty simple stuff. We've also already covered this function on how to use different moving averages as an option. Those were in the previous videos. And of course, we set the value and then we plot our information on the chart. Now, it's quite simple. As you can see, we just have the smooth line and the bars, and this is it. That's all there is. And to use volume, it's just a property of the chart for this particular candle that you're on. So it's similar to the close or the open. You just call volume, and it knows that you're talking about the volume for the current candle that it's processing. And that's all there is to it. We have our chart overlaid. Well, not overlaid. It's on its own chart. The indicator is on its own chart, and it's using volume, which is something we haven't used before, and it's smoothing that out. And this is how you can make your own indicator that's not on the same chart, and you can actually plot more and more information on this single overlay as long as you do it all within the same indicator. Now, if you go to do other indicators and they all have their overlay set to false, you'll notice that it's going to add other charts. So for example, another one that I've done, let's go to the public library, smooth RSI. Excellent. You can see this one also is not an overlay on the main chart, but since it's not part of the same indicator, it's going to create its own chart, and it has all of its information laid on that chart. Now, that pretty much covers it for this particular video. If you want to see this indicator that we talked about here, or the smooth RSI indicator, then please check out my profile on TradingView. You can see I have that published here. It's got quite a bit of likes, so we're starting to get a lot of followers and likes on the account in general. There's all of the scripts from the tutorials before. So if you like this video, please leave a like, and if you like all the stuff that we're doing here and you want to see other examples of things that are being done, please subscribe. There's going to be more videos coming up in the future. I think in one of the next videos we're going to be doing a scoring system on the indicators. We're going to kind of combine multiple indicators and score them and give confidence levels and basically tell you in that particular indicator whether it's a good time to buy or sell. And of course, it's not going to be trading advice, it's just going to be an example, but it's going to give you an example of how these things are actually done, where people take multiple indicators into consideration for a single strategy, as well as plotting them on an indicator to give them an idea of how confident they really can be on a single trade. So that's all there is for today. Thank you, and have a good one. Hey, this is David for BigBits, and in this video we're going to talk about our 6th scripting tutorial, and that is for forecasting. Now, if you're curious what forecasting is, just look at the chart. We have our moving averages that we've been working on, but we also have some dots off to the side, and those dots are actually forecasted values for where the moving average is going to be. Now, we've done a lot of work in this particular script from the last one, so there's a lot to cover. Some of it is, you know, intermediate level programming stuff that isn't going to be super easy, but I'm covering the source code for you, and the source code is completely open on TradingView, so even if you don't fully understand it, you'll have access to it and can play around with it to manipulate it however you want. So let's go ahead and get started. There's a couple of small things I wanted to cover really quick before we get into the meat of the video, and that is we have added some minimum values to our moving average periods, and we've also added a step size. Now what the step is just the increment between points in the setting, and for example the MA1, when we tick this up, it goes up by 1, and that's the step size, and it also goes down by 1 every time you tick it. Now for example, if you set the step size to something else, let's say 0.25 in this setting down here, you can see that it goes down by 0.25 and it goes up by 0.25. That's what the step size is. That's really all it takes care of. Now, there was one other thing, and that is the plots for our moving averages. We forgot to give them a title, so I've given them a title, and now when you go to edit, you can see that our plots actually have a title for MA1, MA2, and MA3. So when you edit these styles for the moving averages, you'll know which one you're editing it for. Now, let's get on to forecasting. Now, what is forecasting? It's pretty difficult concept for some people, but honestly, it's not that difficult. All we're doing is just removing the oldest candles out of a moving average calculation and replacing them with a new candle of the current price. Now, there are ways we can change that, but for now, we're going to cover some basic forecasting, which is, let's say we wanted to go 20 candles back, and this is the 20th candle, and we want to forecast one candle ahead. So what we have to do is we have to remove this candle from our calculation, and then we have to work with the 19 candles, get the moving average of those 19 candles, and then we have to get the price now, and then we have to weight this moving average from those 19 candles 19 times, and then we have our individually weighted current price as a new candle as the future forecasted candle, and then we get our moving average with the weighted value of the moving average. I know this is starting to sound a little complex. We have our 19 candle average from where we remove the oldest candle, and we have the current price, and we weight those two together in a simple moving average of just 2 items in this case, and we get our forecasted value. Now when you're forecasting 2 or 3 candles ahead, you're moving the 2 oldest candles or the 3 oldest, or however many candles you're forecasting ahead. You take those off of the back of your look back period, and then you just weight the current price in that many times. So if you removed 2 candles, you would weight in the current price twice versus the 18 candle moving average. Yes, I know it's very confusing, and I know I've said it's confusing. It's not a simple topic for a lot of people, but if you're following along this far, you probably have a pretty good idea of what I'm saying, so I hope you understand. Now, how are we going to make this work with our old version of code? Because what we were doing was we would calculate the moving averages based on an if statement. What type of moving average were we using? And then it would spit out and assign that particular moving average a value. Well, what we had to do is we had to create a function to where we could pass in the data that we wanted, and it would spit out the moving average value based on that variable data. Now, if you're a programmer, you're probably familiar with functions, and that's what we're doing. We're replacing those if statements that we repeated several times with a function. Now, the function in this case, I called it MA, and what it does is it does that one if statement, but it uses that variable data to spit out one value. That way we can assign those moving averages to the result of this function. Now this works similar to our if statements. Whatever the last line was that resulted in a value in your function will be the value of the moving average. So if you wanted to assign MA1 to a particular call of this function, you would say MA1 equals and then you would plug in your MA information in this function. It would be MA1 equals MA parentheses MA1 type, comma, MA1 source, comma, MA1 period, close parentheses. And that's all you would have to do. Now, the reason we had to do this, and we've already discussed these calculations, the reason we had to do this was because of the forecasting. Now, it's also cleaner code too, but for the forecasting, we had to change the period fairly often because we were removing the oldest candles from these calculations. This is how we did that. We used the period and we subtracted the forecasted amount ahead. Now, ideally, this would be done with the for loop, and we wouldn't have to do this over and over, and we would only have maybe 4 or 5 lines of code total as opposed to 10. Now, that's just a limitation with PineScript, is that it wouldn't let me plot within the loop. I think that's probably just protection on their end or something to keep you from plotting too much on a single chart if you had an error in your logic. Now, what I would have done in another language is I would have made a for loop with a variable starting at 1, and I would have incremented it up and done this calculation, but replaced the number 1 or whatever the number was here, our forecasted amount ahead, with that variable. So if you're more familiar with programming, that's probably a better way to do it. And if they change PineScript in the future to allow those sort of actions, then I'll go back and I'll change it. Or maybe and you're aware of a way to do that now, let me know and I'll change it now. I'd appreciate that. But what we're doing is we're setting our forecasted value here to that 19 period look back when we're talking about a 20 period moving average. If the MA1 was 20 period, now we're subtracting 1 from it, and that essentially removes the last candle, the oldest candle from that moving average. Then we have to weight this 1 moving average value with that period minus our forecast value. That weights it, and then we have to add in our current price, or our current source I should say, and multiply that by the weight of our forecast. So if we're looking 2 candles ahead here, the value would be the price times 2. Now here it's actually taking this and it's multiplying it by 19 if we're doing a 19 period look back. So it gets the moving average and multiplies it by 19, some really big number, and then we add on that 1 into it. So now we essentially have the sum or cumulative value of what our period would be, and we could divide that by the number in our period, and we can calculate what our forecasted value is. Now, this works pretty well. Let's look at the chart. This is a weekly chart on Bitcoin, and you can see that it forecasts the price to continue moving up if price stays the same on the 50 week. But you can see the 100 week is actually trending down even if the price were to stay flat here. Now, before I get too far ahead, you can already see that it looks like it might predict an intersection in the future, which might be a signal that you should buy or sell depending on what the market says. But let's go ahead and look at these functions real quick. I have this documented in the code. This is just some documentation that shows you how the functions work, how multi-line functions work, etc. There's plenty of information here. You can actually plot a value that is calculated from a function in the plot line. So there's plenty you can do. I definitely recommend you check out the documentation if you're going to work with it for yourself with something else. But for what we've done here, there's probably plenty for your moving averages you can figure out. Now, that was actually quite a lot. And you can see this is the MA1 forecast here. And I had to repeat that code for the MA2 and the MA3. Now, like I said, ideally we would have loops that would take care of this for us, but it's okay. We can repeat this code over and over. It would have been very simple. There's not a whole lot of extra code this way since we only have 5 forecasted values. If we had 20, then the 3 or 4 lines of code that a loop would have used would have saved us a lot. But since we only have 4 or 5, it's not a huge deal right now, honestly. Now, what is a bias? And with the indicator that I'm working at, what we're going to be talking about is a bullish, bearish, or neutral bias. And neutral is probably the most common way to do a forecast for most people when they're thinking about it. Is you just take the current price and you move it out. Now, other ways I've seen to do it is to use the slope of the moving average and kind of print that on out further and use the calculated value based on the slope of the moving average in the future as that value to see where the moving average would be. I'm not really sure why that would be a better way than any other way. So what I've done is I've actually created a way to where you can manage the bias in a bullish or a bearish factor so that you can see the potential impacts on the forecasting. So let's pull this up and I'll show you. Let's go back to our inputs and we have bias here. This is a neutral bias right now. So this is as if the price were to stay flat for the next 5 candles. You can see the forecast go slightly down here, slightly up here. Let's try changing it to a bullish bias. You can see they both kind of moved up. The 100 still kind of moves down. It looks like it might even go up first and then move down. And then the 50 just kind of continues to move up a little bit more rapid pace. Now, what's happening is instead of using the price for the next 5 candles or calculating the slope of this line and pushing it out 5 candles and calculating where it would be, what we're doing is we're actually getting the average true range, which is kind of a measure of volatility for the candles in the past. We're getting the average true range of a 14-period look back, and we're applying that forecast in a bullish or bearish way to calculate where the price would go. Because honestly, if you look back at Bitcoin's history or pretty much anything, the price doesn't stay flat for very long. There's usually some sort of volatility, and if there is volatility, it's usually bullish or bearish. Now, it's not always bullish and it's not always bearish. So to handle that, I done something called what I call a magnitude. And essentially, with a magnitude of 1, it takes the average true range of the last 14 candles and predicts the price to move up each candle by that average true range amount. Now, if it were bearish, it would move down by that average true range amount by 1 if the magnitude was 1. Now, essentially, all the magnitude does is it multiplies this average true range by a certain number so that you can manipulate how big of an effect you think is going to happen. So, for example, while price was consolidating here and you knew there was going to be a big breakout and you thought it was going to be bearish, you could have set your bias to bearish and changed your magnitude much higher, and you can see the effect this is having on the forecast. The higher the magnitude, the more it's pushing it down. So if you think the price is going to go down like quite substantially, then you can see the effect this would have on the moving averages. Now, I wouldn't recommend a number that high most likely, but it might be a good idea to use 0.5 here, because essentially this is a bullish direction, and it's a good way to account for some of the candles being red, because if you just multiply it by 1, you're essentially saying the average true range 14 times in a row, and that's not really realistic if you were to do that candle by candle. But it is a way for you to be able to manipulate it. Now, how do we do this? I've already kind of mentioned an average true range and multiplying that. And really, that's all it is. Let's go through and look at how we calculate the bias. Now, the bias is used for all of the different forecasts because it is predicting essentially the next candle, where that price is going to be from where we were. Now, how do we do that? We made a function for bias to calculate the bias. Now, if your forecast bias is neutral, it returns 0. Okay? We're not going to add anything additional to the candle. So what's happening is it's actually using the base price here, and it's adding on top of that the average true range. But since we're neutral here, we're not adding anything on top of it. Now, if it were bullish, as I mentioned, it would use the average true range of the bias period, which is 14 by default, which is a pretty standard average true range, and then you multiply that by your magnitude. So your next candle predicted out, the price would be based on the average true range on top of the current price. Okay, so it would add that average true range up, and this is what it would expect for the next price, and it would continue doing that for each candle. Now, if you were to do a bearish bias, you'll see that it does the exact same thing as the bullish, except it multiplies it by -1. So it'll take your current price and it will add a negative number, which just subtracts it to where it'll think your forecasted price is going to be based on this value on this candle, which is lower. So hopefully this all makes sense. And what we do in order to accommodate that for each length of the forecast is we just add that on there as many times as we're forecasting out. And this calculation works pretty well. So you can find this script on my profile, and this is the 6th one, and by the time you look at this there's probably going to be more. I've already started working on a 7th, which has some new stuff in it we'll talk about in the next video. But you can get this and you can look at the source for yourself and play around with it. But more importantly, if you're interested in seeing where something might cross over based on these changes, you can play around with the settings yourself. Change the magnitude, change the bias period for the ATR, change whether it's bullish, bearish, or neutral. You know, there's plenty of things you can do to impact the forecasting here to get it to work to how you think the market is going to move. Like I said, if you think it's going to be bearish, set it to bearish. If you think it's going to be really bearish, change the magnitude to a higher number. And you can see the impacts all this is going to have on it, which I think is pretty cool. I haven't seen this on an indicator before, and I guarantee you in the next video we're going to be doing something really neat, and that is changing the resolution for each of these moving averages. So you could be looking at a weekly chart, or let's say for example we're looking at the daily chart. We can plot the weekly moving average on the daily chart so that you can see where a weekly moving average such as the 200 here, which proved support back here, you could see this on a daily chart, and maybe that's helpful for spotting support or resistance when you're looking in at much lower time frames, much lower resolution. So thank you for watching. That is the video for today. Please hit like if you like the video. I know there was a lot to cover and there's a lot more going on. And please subscribe if you like this series. We're doing all kinds of videos about trading and automation, indicators, things like that. We're doing all kinds of stuff. And if you got any ideas, please let me know. I love to look into doing the ideas that people submit. We're going to be working on a lot of projects related to cryptocurrency and such on this channel, so please subscribe. That's all for today, and I look forward to you watching the next one. Hey, this is David for BigBits, and in the last video we talked about our RSI strategy that I'm showing you here, and in this video we are going to discuss using the lowest and the lowest bars function. There's also the opposite version, which is the highest and the highest bars function, which basically what these do allow you to just with one line of code tell PineScript to look back a certain amount of candles for the lowest value within that period. So this doesn't have to do with just price, and in our example we're actually going to use the RSI. We're going to look back at the RSI. We want to find the lowest RSI, and we're going to want to require our lowest RSI to be below a certain value. We're going to attempt to find a bullish divergence by making sure that our price is currently lower in some aspect than the price of the lowest RSI, and our price is still on a downtrend. So essentially something similar to what you see here. You see the RSI has kind of bottomed here, and we want to buy below at a certain point, because usually that's how you would find a bullish divergence against the RSI. So we're actually going to go ahead and do this. We're going to have a few new parameters, or inputs I should say, as they're called on PineScript here. Let me copy these over. I did a lot of live coding in the last video and it went pretty long, so we're actually going to just copy some stuff over from a more completed script this time. We're just going to call this our buy below target and paste this in here. It's 2 parameters. We're going to be looking to buy below the lowest low in the RSI divergent look back target percentage. And it sounds really kind of silly, but it'll make more sense in just a little bit. And then there's also the source. We're going to be looking back and we're going to want to copy this value from the lowest RSI in our look back. So if we looked back, 30 candles here, the lowest RSI is here. We'll want to grab the closing price or the low, something like that from there, and that's what the source is here. Now going on, we are also going to have to specify what that buy below target is with a formula, and we're going to do that down here next to our profit and loss. And the reason we're doing it down here is because this is going to be pretty much the exact same calculation as what we're doing here. And let me go ahead and paste this in here. It's going to look pretty overwhelming, there's a lot of variables going on here and we're doing a lot of different things. So our buy below target, what we're going to set it to be is we are going to use our buy below target source, which is the close, and we're going to look back using the lowest bars. So I told you the lowest function looked back to give you the lowest value. When you do a look back, say we're going to look back 50 or 100 candles, whatever it is, we are going to return the value that is the number of bars offset from the current candle. So if we look back, say this is 25 candles back, the value it returns is going to be negative 25. So when we look at the close and we're going to be looking back at the RSI through this period, it's going to return a negative number. So this is essentially the same thing as saying let's look at the close at 25, but both of these are now variable and can change based on our inputs. So for example, if we change our source to a low, it would be equivalent of doing something like this. And if we were looking back 100 periods, maybe we had a lower RSI even back here, so the value it returns would be like 88. But it actually returns a negative number, so we multiply it by -1 to fix that. So that's what you're seeing here. We're getting the closing price of whatever the lowest RSI is in that look back period. So it's a little bit confusing if you haven't been able to follow the code, but hopefully where I've done this, it makes a little bit more sense. Then what we're doing is we're going to subtract a percentage difference from that to create our buy below target. Now let's see what I had that set at by default here. Buy below target %0. Now this is something that can kind of give you a little bit of buffer. So if the value it plots is here and you wanted to buy when the price dropped below that, when the RSI was going down a certain amount in the trend, you might want to give it a buffer. So if you had it set to where it would plot here initially, maybe you want to give it a little bit more room to drop and you would want to buy further down. So this is just an example of how we do that, and I'm actually going to plot that buy below target, and we're actually going to keep that on there going forward so that you can kind of see how that is, and we can actually change how it's going to look on the chart. And let's see, what have I done? The RSI divergent looks back. Okay, so I forgot to add a couple more variables. So we need the divergence look back and also the buy below target. I need to initialize that variable as well, it looks like. Let's see, this would be with the RSI. So this is the amount of candles we're going to look back for the lowest RSI. And let's see, the buy below target, and I do apologize, I'm copying this code from the other screen here. The reason that's not working is because it's in that same line, so there isn't actually anything wrong with the buy below target. Okay, there we go. So now you can see this line that it's requiring the price to be below before it will buy, but we haven't actually done that as part of our conditions here in our is a buy. Now, if you were following the last video, you would know how we've set this up so we can track what conditions have to be met. So we're just going to add a new one in here, and it's going to be really simple. We just have to have our buy below target source of the current candle, which by default is going to be the current price through the close. You can see that's set by default to close. And we're going to require our current price be below this blue line, which is our current buy below target. So let's see if that makes any difference on this particular strategy here. Yeah, so it took away a lot of, well, all of the trades from here. So we're going to be working on changing this to where hopefully we can find those things a little bit more going forward. So I've shown you how the lowest bars work going backwards, and there's also one where we did the lowest. So we also want to require that the RSI be below a certain number. So we're going to look at a requirement for the RSI. And we need the RSI within our look back. Its lowest value has to be below a certain number. So, I mean, this is probably a little bit confusing again, but say we're looking back on our candles, and let me apologize. I've probably had my head covering up a little bit of things. Let me hide that now. We're going to be looking back in the candles for the lowest RSI value. And what we're going to do is say the lowest RSI value is this one. We actually want to require it to be below a certain number. So if we're looking back and our lowest RSI is, you know, still way up here, like at 50, that might not be optimal, especially when you're looking for a bullish divergence. So we want to require that it's below 25 or 30, something like that, the lowest value in our look back period. And then we can add that in there. And once it meets that and the price is still below, and all of these other things, then everything will come to work. So let's go and take a look here at how we're doing this. And this is actually quite simple. Let me copy this condition over. This is another condition on our is a buy statement. We're just copying some more stuff over. We are going to use the lowest function. I've already told you how this works. And this is comparing the smooth SRI for some reason. I need to change that in my more completed script here. But we are requiring that the RSI be below, using its lowest value in that look back period, below what we have set with our input. So if we set this to 30, it's got to be below that in its lowest value going back. So that's pretty straightforward as well. Let me see if there were any else that I also needed to do. We also needed to set another one. This is for the smooth SRI. It's pretty much the same thing. But once we have this one, I think this is pretty much the same script that I have. There might be a few things different. Now this is the same thing. We basically just want to ensure that with our bullish divergence that our current smooth RSI, excuse me, the orange line here is above a certain value, or below a certain value, excuse me. So we're requiring that it has a downtrend of 3 in the default, but if that downtrend is coming up around 50, then that might not be a good time to buy. So we want to require that its downtrend of 3 occurs below a certain value. So we're going to by default require that to be 35. Let's go down here and let me copy this. I'm on the other screen right now looking for this. Here we go. And there was also a RSI currently below as well, so we'll do that. It's the same concept as a smooth RSI, and you can tell we're getting a lot of conditions now. You can see I've added in the smooth RSI and the RSI below a certain value, and we have to add in that other RSI currently below parameter, or input I should say, and then I think we're going to be done. Oh no, it's already on there, currently below. Did I already have that on there? Yes. My apologies. I had just not added the one with the smooth RSI, excuse me. I'm a little off today. So let's save this. And let's see, we had one issue. Where is this? Oh, I had already added that in there. We just didn't have the... Oh, well, we already did have the condition. So, yeah, I'm way off right now. I thought that we hadn't done that, but we had. I think the thing that really threw me off was on the lowest here. It used the SRSI when it wasn't supposed to. So that completely threw me off on everything we've been doing since then. Okay, you can see we still don't have any trades. So let's try to change these numbers around to where we can get something. We're on a 5-minute chart here. Let's see. I'm trying to copy some of these from the other one here. Well, let me just copy some of these over from my default script. I'll actually just type them in here. It'll be a little bit easier, I believe. All right, our RSI curve is 14. Currently below was 30. All right, our divergence look back period was 25. Our RSI lowest divergent look back period. Let's see, which one is this one? Oh yeah, that's that one. It was set to 25 as well in the completed script. The SRSI curve is, let's see, where is this one? 10. The SRSI currently below I have is also 30. And then the minimum SRSI downtrend is 3 as well. Let's see, there's another setting here. The SRSI currently below 35. So what did I say 30 for here? My apologies here. That was the RSI currently below. So I was looking at the wrong one. Let's save this one and see if that makes any difference to the strategy tester here. Okay, so you can see it's actually making some trades again. So let's take a look. They were all profitable except for one. We had 13 trades now. I think before we had 11 or 12. So we're actually doing pretty good. Let's see. Let's see if we can go back and find one of these trades so we can get an idea of how they're occurring. I think these two are really good examples of what we're actually trying to accomplish. And let me pull this up to where it's much larger here for you. So you can see within our look back period, we were looking for the lowest RSI value, and we were setting our minimum buy target to a certain value here, and we wanted the price to close below this line with a minimum SRSI downtrend of 3 below a certain value with the current RSI below a certain value. And it kind of caught a bull divergence here. You can see it bounced pretty well from there. And the same thing here. I'm actually pretty impressed that it actually caught this one, because that's an extended period of dips one after the other, and it caught it pretty much right at the bottom. So I'm really happy with how this is turning out right now. This one I think caught it a little too soon, obviously, and it hit its stop loss. We have one here, and you can kind of play around with the stop loss and the take profit to maximize. I think the settings I had, I forgot to update these. I used 3 and 1.75. Let me see if that was actually any better or not. Go back to the performance summary. No, it wasn't any better. So yeah, you can play around with these. The settings that I have on this video, it might have been slightly better. Let me change it back again. Yeah, so it was better. So you can play around, adjust these numbers up and down with the toggles here to try and find something that'll result in more returns on the performance summary. But that pretty much does it for this video. I hope you've appreciated. We've went over the lowest function and the lowest bars. So just keep in mind that the same thing is true for the highest and the highest bars function. And if you're ever confused, you can always just kind of hover over it in your Pine script editor and hold down the control key and click that. It'll take you to the updated Pine script language reference manual within a modal pop-up on the screen, so you don't have to actually go to another page, and it'll kind of tell you what it's actually doing. But yeah, I hope you appreciate this. I'm going to work on getting this and publishing it, so everyone will have access to the code, and you don't have to try and copy and follow along with the video itself. And you can actually play around with all the values yourself. So keep an eye on my Twitter, also my Discord. I'll probably try and update on both of those places when these things are completed and published for everyone to see. I really hope you all appreciate me doing that. If you do, please like the video, please comment, subscribe, give me comments please on what else you would like to see. I've had a few people make some suggestions. There's some really good stuff coming in. I've got a lot of content planned. The hard part is getting time to do it. I've been working on a utility for myself that's going to automate a lot of things, and I can't wait to share this with you. If you've been following my Twitter, you've probably got a really good idea of what it is, because I've been making some test posts with the utility I'm working on, and it's going to be sharing a lot of information automatically, and it's going to be pretty cool. So definitely stay around on the channel to check out that video coming up soon, because we're going to be sharing a lot of great stuff when that comes out. But other than that, I've already asked you to like and comment. You can always also check out my TradingView profile if you like what we've been doing here. You can always check out the TradingView profile, see some of the ideas I've posted. I haven't really posted a lot of ideas lately, mostly because I've been so busy working on this utility and also the content for these videos. So hopefully once we get that utility completed, the ideas will be much easier to create and come by. You can also check out the scripts that we've already made and published here, and I'm going to try and get through this quickly. There's also the referral, so if you've been following along and you wanted a paid subscription, please use the referral link. It's in the description of the video. That helps me a lot, and also helps you as well. You get $30 towards an upgraded plan once you pay for your first one, and once you do that, that really helps me because the premium subscription is pretty expensive. So I appreciate you all watching. Definitely stay tuned. There's a lot of great stuff coming. Hey, this is David for BigBits, and in this video we're going to take a look at our next iteration of the scripting tutorial, and that is scripting tutorial 3, and we are going to be discussing triple many moving averages. And that sounds kind of confusing, but essentially all we're doing is we're having 3 moving averages plotted on the chart like we did before, but instead of having the moving averages fixed as being either a simple moving average or an exponential moving average, now we're going to have the ability to change which type of moving average we use for each of these lines. So I'll go ahead and show you the end product here, and you can see, of course, the 3 lines, but the big change is in our inputs on our settings is for each moving average. So for moving average 1, we can change it to have a different type of moving average. Let's have it be an exponential moving average. You can see that it changed, and since an exponential moving average usually follows price a little bit more closely than a simple moving average, you can see it's a little bit closer to the actual price. Let's go ahead and change it back for the video, and we can go ahead and discuss kind of what we've done. Now, the first thing you've noticed obviously were the inputs. How did we have it set up to where you could select whether you're going to use an SMA, EMA, RMA, or WMA? Now, if you've watched the last videos, you know that the inputs are handled by storing a variable with the result of the input. Now, the inputs that we're using are defined by an options array or a dictionary, whatever you want to call it. We're using options. Now let's go to the input documentation, and you can see the options parameter here. This is useful to provide users with a list of constant values they can choose from when using a drop-down. So for example, in this documentation, the options you would have in the drop down are A or B, and it shows you how to use those values here. So you can see that choice was assigned to the value in the options list that you defined. It's pretty simple. So in our case, we have 4 different moving averages we're working with right now. We have the RMA, the SMA, the EMA, and the WMA. Now, we had to store a moving average type for every moving average that we have in the list. So we have 3 moving averages. So we need 3 types to be stored, 1 for each moving average. So this is the moving average type for MA1, 2, and 3, and so forth if you wanted to add more for whatever reason. Now, that alone doesn't make it to where it will actually change what's plotted here. We actually have to tell it to calculate the correct moving average to display the correct data. So for example, if all we did was just change and add this input, if we changed it from SMA to EMA, it would still show the SMA lines and there wouldn't be any difference. In order to make it to where you do change it and it will recalculate those values, you have to actually do the logic to where it'll look and see which moving average it's supposed to use and use the appropriate moving average calculation. Now, I'm going to expand our code here so maybe it's a little bit easier to see. We're going to start learning how to use logical conditions, and the most simplest logical condition you can use in just about any programming or scripting language is a simple if statement. Basically, you're checking to see if a certain condition is true, then you will do a certain action. So for example, if our MA1 type is equal to the SMA option that we defined, then we're going to run the SMA calculation based on the close, which is the current price, and the amount of look back period that we wanted to use. So for MA1, the default was 50. Our MA1 type was SMA, so it would check our MA1 type was SMA, yes, so it's now going to execute the SMA calculation using the close price for all of the candles that it's using, and it's going to look back 50 periods to calculate the SMA. Now there's something in here you may not have seen or be familiar with other languages, and this is, in my opinion, fairly unique to PineScript. I haven't delved into tons of different programming languages, but for the ones I'm familiar with, this is kind of different. So in PineScript, you can set your variable value equal to the if statement. Now what's going to happen is your if statement is going to return a value, and it's always the last function or expression that you use is returned back. So in this case, setting the MA1 value, which is where our green line is dependent on what the last function is that we call here. So when we calculate the SMA here, it sets the value of MA1. Now, if you're not too familiar with coding, you'll notice this looks really similar. You know, are we setting MA1 equal to if? No, we're setting it equal to whatever the condition is that gets executed last in this if statement, this nested if statement, I guess you would call it. But you'll also notice there's just 1 equal sign here and 2 equal signs here. Now that's because here we are comparing MA1 type to SMA. You use 2 equal signs in PineScript to do comparisons to see if a condition is true or false. So if we did less than, the condition would simply be that. And then it'll tell you whether or not the MA1 is the MA1 type is less than that. But that doesn't make any sense. We're comparing strings there. But just to give you an example, we're comparing the type to the string here, and if they're equal, then it's going to execute this. And it did. And the single equal symbol, that just means we're setting the value. So whatever is on the left, we're setting that value to whatever is on the right. And since it's an if statement, it's whatever expression gets calculated. I know I probably rambled on a bit about that, just trying to explain it for those of you who are interested a bit more. But essentially, it's doing what we want. We're setting the MA value of MA1 to the calculated value based on whatever moving average that we have selected. Now, we continue to do this for our other moving averages as well, MA2, and we make sure to use the correct MA type. We got to make sure that we replace MA1 with MA2 here to make sure it's comparing the correct moving average type and no longer still using MA1, and also with the periods as well. And then you continue to do this for your other ones, and now you can plot your moving averages that we set with our logical if statements. So there actually was quite a bit of work here if you're new to programming or scripting to understand what's going on. Now, do keep in mind with PineScript, you have to get the spacing and the indentations on each of these lines after the if statement absolutely correct, or they won't execute correctly. That's kind of what I've learned. So when you run an if statement, the next line I believe has to be 4 spaces in or so, but just using the tab, just using the tab key will take care of that, and it'll give you the correct spacing. If your next line isn't at the correct spacing beneath the if statement, it won't execute. So you'll notice every if statement, the line that we want to execute as part of that logic is always indented by 4. Now, when you want to end your if statement and do something else, the else statement needs to be directly below the if or at the beginning of the line. So you can see here, it's not directly below the if, but it's back at the beginning of the line. And these need to be done correctly. From what I have learned, that may not actually be the case, but I do know that it works perfectly well, just like this. So do keep that in mind. All right, so that pretty much takes care of this indicator. If anyone has any questions, please let me know. If you like this video, please leave a like on the video and subscribe, because we are doing several more. I'll go ahead and I will show you. Well, first of all, I'll show you the if statement here. The documentation is in the code. You can get more information about how it works here. But let's take a look at my profile. I want to show you the scripts that we've done and we are going to be covering in the videos. Let's go back here. Let's go to scripts. You can see we've gotten 6, and I've already started working on a 7th at this point, and we're going to continue doing more and more as time goes on. So if you're curious, please check out my profile on TradingView. It's going to be in the description of the video. Make sure you subscribe to YouTube here so that you can get updates on this series if you're wanting to learn more about calculating your own indicators. You can always take what you learn from this series and apply it to other ones as well. So I definitely appreciate everyone for watching. Thank you, and see you in the next video. Hey, this is David for BigBits, and this is going to be our 3rd video in the scoring development, and I plan on this to be the final video in the scoring development kind of mini series within our big series here. And what we're going to be doing is we're going to be adding loops, and we are also going to be adding some bonus points to our chart based on its current values. Now, the reason we're using loops, and I've mentioned this in the past videos, if you haven't seen those, please go back and at least watch the last 2 videos so that you're aware of everything that's going on. I know they're a little bit longer than my normal videos, but this is a pretty big topic overall to cover, and there's a lot of big things going on inside of it that are important to understand, especially loops here. So what we're trying to do with these loops is we're trying to loop back through the previous candles and try and catch this trend where the price is going lower and award it more points as it goes on. That way we don't get the best signal back here, we get it closer to the bottom. Now, in order to do that, what we're going to do is we're going to have to create a new value here. Make a section for our indicator bonuses. And let's make one for the RSI. And I made this a float value because I got some errors when I tried to do this before, and it needed a data type associated to it. So in order to do a loop in PineScript, it's similar to a C# loop if you've done those, but we're going to be using their standard format for the for loop. And it's like this. So if you wanted to loop from 1 to 10, you would make your loop like this. You would want to have 4 spaces on the next line. Code goes here, and that would take care of your for loop. Now if you wanted to break out of your for loop at any point, you would just use the break keyword, and I used a semicolon because I'm used to that with C#. Now for us to be able to go back and loop back or look at the candles in the past, then what we need to do is we actually need to use a negative number. So if we start at 1, it's not going to work. So I'm going to show you how this works, and we're going to add points to it, and hopefully it all makes sense at the end. Now what I used was I wanted to go back 7 candles. So let's pretend we're looking back here at this huge dip, and we're on this particular candle, and we want to look back 7 candles around here, and we want to see where our RSI was at that particular time. Now to do that, of course, we need to go back 7 candles, and the reason I wanted to start with the -7 is because I want the highest or the furthest candle back first. Now if I wanted the first candle first, that's easy. I just start with 1 and go backwards. But what I want is I want to start with the farthest candle back first and then get closer. Now I'll set that to -1, and we'll go up by 1. Now that's going to do is that's going to set us 7 candles behind, and each iteration through the loop is going to go up by 1. So it's going to go 1 candle to -6, -5, 4, 3, 2, 1 until we get to the current candle. So how are we going to give it bonus points? Well, first thing we need to do is we're not going to give it bonus points unless its RSI is less than 35. And because that's where we did with the actual points up here, we had to make sure that the RSI was less than 35. Why would we give it bonus points if it wasn't already less than 35 as well? We want to see that the RSI is still below those numbers. So let's go back to our RSI. So in this particular instance, let me make this the whole screen here. So once it dips below 35, we want to continue adding more and more points the further below 35 it is. So not only do you get the points for how far below 35 it is, you're also going to start getting more and more points added on the lower it is. And these are going to be cumulative. So the farther back it stays underneath of that, the more points you continue to get. So we're under 35. Now, how do we check? Well, that's for the current RSI, and I apologize. I should have done this when I started typing it a minute ago. We want to get that candle back, but if we just pass in I, it's going to be -7 is a zero-based index that only goes into positive integers, so that's not going to work. We're going to have to call the absolute value of I. So to convert that -7 on the first iteration to an actual 7, it'll go back those 7 candles to the 8th candle back. Now, this is how we look back in the past. We're looking now at the 7th candle back, making sure it's below the 35 value RSI, and to make sure that this is still valid. So to make sure we didn't have a huge jump in the RSI and the price jumped along with it, we also want to make sure that the price continued to go down. So what we're going to check is we're going to check to make sure that the current close is actually less than the close I periods back. So we're not only are we checking that the RSI back here, if it was below 35, but we're also checking that the close in the price was below that as well. So it just kind of confirms that we're giving this bonus points because the price continued to drop, even though we were correct in noting that it should have been worth points below 35. So let's go ahead and continue here. We're working with our if statement. We need to give it another 4 spaces. I believe that was correct. And now we are going to use our RSI bonus value, and we are going to set it equal to, now to reference the value outside of the if statement, we have to use this colon equals, and you would have known that if you had watched the other videos so far. It's way back in one of the earlier videos where I covered the if statements. Now, I believe we also covered functions with those as well, but for this, we're going to set our RSI bonus. Now, we also need to include its bonus already so that it's cumulative. And then we're also going to add on top of that the value of the current candle back. Now, I on the first iteration is -7. So with the absolute value of that, it'll make it 7. So if it's true on the very first candle that our current price is below that candle's price, which it appears to be, and the RSI is below 35, which it appears to be, it'll give us 7 points. Now in the next candle, if one of those conditions weren't true, it just wouldn't add any points, but we would still have 7 bonus points for the current candle. And that continues on, and as the price continued to drop, those points continue to accumulate as a bonus for the current candle. So that means your points are going to continue to go up. Now they may fluctuate a bit, but for the most part they're going to continue to go up. Now there's ways we can take care of averaging that out, but for now we're still just doing an example. So hopefully this will make more sense how it is. Now we don't need this break line here. And with our total points, we also need to add in now our RSI bonus. Now, I've already gotten the code for the stochastic. It's the exact same code, just for the stochastic. Excuse me, just for the stochastic. And I'm going to paste that in here, but I need to fix the capitalization because I was kind of lazy earlier and I did not do it correctly. Give me just a moment. This will be a lot quicker than if we did this with live coding, excuse me. Or, yeah, if we had coded this all again, we would have had to have done this anyway, but we're saving a little bit of time by not having to type all the conditions and stuff. Got that. Now let's add those stochastic bonus points in on our total points as well. Save it, and you'll notice there'll be a lot more points here if I did it correctly. I also wanted to use this stochastic D, and of course I did not capitalize all of those. My apologies. Thank you for holding on and waiting right now. It's hard to keep up with all of these different variables between everything that I'm working on. Okay, I believe that has it, and actually what I wanted to do was I wanted to use the stochastic D. Now the reason I wanted to use the stochastic D is because it's a little bit slower and it'll stay at a lower level longer. And if we're trying to catch that drop, even if it continues to go up on the K, the D will still be lower, so that's one of the reasons I wanted that one. Now, let me see. Of course, I referenced it wrong still here. The joys of live coding. Okay, that took care of that. So you can see our value is actually a lot higher here now. But how do we make that even higher? Because it looks like it's still even lower point values than that, and it's hardly any higher than that. And there was a dip in between here. But honestly, it wasn't a terrible time to buy anytime it got below, or it got above a certain point here. They seem like decent times to buy. Going back, you can check. They're actually pretty decent. Of course, that was during a bear market, but it did correctly kind of call an uptrend there. Small one there. It's a very good one here. That one probably wasn't high enough. Those probably weren't high enough. But you get the idea. It's kind of helping you here by combining all of these different points together based on your confidence value. The lower those values are, the more points they're worth. And looking back and accumulating all those previous points, it starts making a difference. And you can see these points are adding up to a value that's going to be helpful. And you can imagine a scenario where you have different indicators that you're more familiar with, that you know how the points should be weighted, and how you can come up with a scoring system to work for you. That's what this little mini series is all about here with the scoring development, is kind of help you with your own point system if you want to do something like that. Now, another idea that I came up with when I was doing this was to use these points that we've come up with similarly to how we used our stochastic and our RSI bonus to reward the candles that have higher points cumulatively, like we did with the price drop. So if the price continues to drop and we had high values before, why should we continue to not add points to them? The farther you go along, the more valuable they should be. So just based on our points alone, we're going to add more points on top of it. Now, to do that, we're actually going to have to come up with a new total here. And let's just go ahead and copy this code. Yeah, let's copy that code from the stochastic. And we're going to call this self bonus. Go back and change some of the wording here. And thank you for watching this video. I know it's going on for a while, but hopefully you are learning quite a bit. And we have to reference our total points instead of any specific indicator. Our indicator is our total points that we're using. And we also need to change this from a P to something else because it's already being used in that particular loop. And we also have to change the references to it. Excellent. There we go. And we need to change these as well to the self bonus. Excellent. That's got that. Now we need to plot another total. And that is going to be our total points plus our self bonus. And let's color this one blue. Alright, so let's try and save this. Hopefully it works. Ah, it worked. I don't believe I did this correctly. No. Okay, I know exactly what I did wrong here. But you can see it does apply bonus points, but it's only doing it to the ones below 35. I actually meant to give it bonus points for the ones above 50. 50. Yeah, 55 or 50. So we actually need to change the condition here. We need to make that only give bonus points based on previous candles that were above 50. Ah, and now you can see, even though there was that kind of jitter there, it continued to go up as the price continued to go down. Now, you notice there's a huge dip between those. That's going to be kind of hard to avoid because the price did bounce. But in this particular case, maybe you can zoom out on the chart to, say, a 3-day candle, and it makes a little bit more sense. So thank you for watching. Please leave a like if you like the video and subscribe for other videos similar to this. Going forward, we have a lot of different things to cover. I've got a lot of ideas for PineScript, but there's also going to be other video series on smart contracts. I'm going to start sharing some practical examples on those soon, hopefully, if I haven't already by the time this video comes out. And if you want to get the indicator that we've been working on here, I am going to end up adding it to my TradingView profile. That's BigBits.io on TradingView. The link should be in the description for the video. Now you can see all the other scripts that I've done and take a look at those. And if you're curious about any of those, I've pretty much made a video for all of them, and you can go back and look at all of those videos. But thank you once again, everyone, and have a nice day. Hey, this is David for BigBits, and in this video we're going to take a look at a new type of indicator that we're going to be covering here, and that is essentially combining multiple indicators, which we've already done. But in this particular indicator, what we're going to do is we're going to create a scoring method, and the indicator is going to use points based on the different indicators we're using to help us determine when a good time to buy might be, or just how confident the signal to buy might be. So to get started, first thing we're going to do, we're actually going to make a new script. So click on the Pine editor. If you don't see it on your chart, it's down here at the bottom. Pull it up, go to New, Blank Indicator Script. We're going to start out with an indicator. This is what you're going to start with here. There's really not much to it. We're just naming the indicator, the study. If you've seen the other videos, you'll know what the study means, and you'll know what plot does as well. But plot pretty obviously just plots whatever you want on the chart. So in this case, if we were to save this indicator and add it to the chart, it would plot the close, which is the current price or the end price of each candle. Now let's go ahead and name this scoring development. Now I'm going to kind of do some live coding today. For this video in particular, mostly because I had a very complex scoring script or indicator that I made, and I realized I need to break it up into smaller segments. So this video is actually going to end up being about 3 videos worth, because there's a few other concepts that we're going to cover that need to be covered in their own video, and we're going to build from this particular indicator that we're starting with today, which is a very simple example of how the scoring is going to work. And then we're going to move into one that's a little bit more complex and go over some other parts of PineScript that's going to help you with other things, and hopefully do some things you haven't really thought of before. So let's go ahead and save this as scoring development. Excellent. Let's name it. Well, actually, let me copy some code over here from my other screen. Just a moment. We'll just rename this, copy that. So what we're going to be doing in this particular indicator is we are definitely not going to be plotting the close price. I'm going to go ahead and erase that because we don't need that, at least not yet. What we're going to be doing is we're going to be taking a look at 3 different ways to judge what's going on the chart. So we're going to look at the price. We're going to see if the candle is green or not, because usually if you're looking for a bounce, then you want a green candle. Like I said, this may or may not be a good strategy. We're just getting started here. I just want to show you. So let's pretend that if it's a green candle, it's worth, let's see, 5 points or something like that. And if we have the 50 period SMA, which I have on the chart, if it's moving upward, then we'll give it a few points because we're in an upward trend. Now, the other one that we're going to be doing is the RSI. And what we're going to be taking a look at is we want to give more points for RSI the lower it is. Now, one of the things we're going to cover in the future videos is how do we handle times like this, where you can see on the chart where the RSI bottomed out here, but the price continued to drop even though the RSI went up. Now, you might look at that and call it a divergence, but what you really want to do is you want to quantify that somehow in your scoring, and I think I found a way to kind of help with that. It doesn't necessarily identify it exactly, but the scoring method that I've come up with that I'm going to show you in the last part of the videos for scoring will kind of help you account for the price continuing to go down even though RSI bottomed out a few candles ago. But for now, we're just going to focus on trying to capture a low RSI as a more valuable point, and in that case means it's going to be worth more points on our indicator. So what we're going to do is we're actually going to build an indicator kind of like our RSI model here, except it's not going to bounce between 0 and 100 like RSI. It's going to be on its own chart here. That's why the overlay is set to false, and it is going to range from 0 to whatever number of points it adds up to. So it could add up to 10 points, it could add up to 1,000,000 points. It just keeping things relative in scale. All right. So now that I've explained everything, and hopefully you're still watching the video, I know I normally show you an example. That's why I said these videos are going to be a bit different. So let's go ahead and start by calculating our RSI, and we'll name this RSI, set the RSI, set to the close value for a 14 period, that's default. Now I'm not putting in the inputs right now like we have in the past, and that's basically just because this is the first one. And it doesn't really matter if it's hard-coded, we're just doing this for an example. Now, the other thing we want to do is we wanted to check for if it was a green candle or not. So we'll name this one is green, and I actually need to go back and change these. And we're going to use a condition, which is the parentheses. If you compare two values within the parentheses, it's condition, it's going to return true or false. So we're going to set is green to true or false by comparing the close, making sure it is greater than the open. So let me go back. I want to rename these. I hate working with lowercase. It's just something I've gotten used to. I typically capitalize all acronyms and use camel case with my other variables. So after we get that, we also wanted to look at our SMA 50 period. And make sure these comments match. All right. We'll call this SMA, and then we will call the SMA built-in function with the close with the 50 period. So now we have our values, and let's actually go ahead and plot these. Plot the RSI. We're not going to plot is green, and we'll also plot the SMA. The reason I'm going to plot is green is because it's a true or false. It might show a 1 or a 0, but I haven't even tried plotting a Boolean value on here before. So we'll just save this. Oh yeah, I need to capitalize those. My apologies. That's part of the fun of doing this kind of live coding. Even though this is a recorded video, I am not going to go back and edit this stuff out. That's too much work. Alright, that's been saved. Let's add it to the chart. Okay, so you can see our SMA up here. That's following along with this value. Of course, it's not on that chart because we set the overlay equal to false. Now the RSI is down here, and you can see it's this number. And let's go to the last candle here. It's 46.06, and on the smooth RSI right here, you'll notice it's also 46.06. So it's the same calculation that we're using there. Now that we know that, I'm going to go ahead and get rid of that RSI. We're going to quit plotting the simple moving average just because it throws things way out of scale. And now we can see the RSI. Now, the first thing we're going to do is we're going to start coming up with our points. Now, the first thing we're going to score is going to be if the candle is green. So let's call this one is green points. And let's set that equal to, we got to do a condition here, is green. So if it is a green candle, then we are going to give it, let's see, how many points did we say? I think I said 5. Let's just do 3. And if it's not green, then we're not going to give it any points. That's fair enough. So if you haven't seen my videos before, this is checking this condition, and if it's true, it returns this value. If it's false, it returns this one. We're setting that value here. Okay, go on to the next one. First, let me go ahead and add some notes here. Green points. We'll do the SMA points now. And we're going to have a condition here to check whether the current SMA is greater than the previous SMA. And I've covered this in the past in one of the most recent videos, and that is we are working with an array. The simple moving average is a series of data. You can see it on the chart here. In order to access the previous values back here, when we're looking at the calculated values, we have to supply it an index number to go backwards. So the current candle is always index base 0. That's the way arrays work. So if we want to go back one candle, we have to say we're going to use the SMA 1 in the array. That's the first one back. So that's how we get the value of the previous one. So to know if the SMA is moving upwards, we have to check if the current SMA was above the previous SMA one period back. It's pretty simple. So once we check that condition, if it is true, we'll give it another 3 points. If it is false, we'll give it 0. So now we have points for our green candle. We have points for a upward moving trend. Now the interesting part is really capturing the value of the RSI. So we don't really care about giving points to the RSI if it's above a certain level. I mean, obviously if it's up this high, then it's already up to a high amount. We probably don't want to buy there with our indicator. We don't want to give these points to signal a buy. So what we're going to do is we're going to have a limit that we're going to go under. Now we're going to start with, I believe it was 35 I used in my testing. Let me double check that. Yes. So we're going to look at only candles that have RSI under 35. And how do we do that? So it's actually really simple how we calculate these points. And what I'm going to do, typed on the wrong page. What we're going to do is we are actually going to give 1 point for every value the RSI is below 35. So for example, if we're looking here and the value is 23, if it rounded it to 23, if it rounded down to 23, that would be worth 12 points because it is 12 below 35. Likewise, if this rounded down to 20, it would be worth 15 points here because it is down at 20, 15 below 35. Well, let's go ahead and type that in. Now we're going to check. We have to have the RSI below 35. At 35, it should be worth 0. And we need to have, no wait, I think that's all we need for right now. Excuse me. I was getting a little bit confused with my code. So if it is below 35, then the value we want to return is 35 minus the RSI. So if the RSI, like I said, was 20, rounded down on this particular candle that we're looking at, 35 minus that 20 would leave us with 15 points. So that means the lower the RSI is, the more points we're giving to our particular indicator here to show us when to buy. You know, it's not going to be ideal when we plot everything out, and you'll see that, but I hope by now you're kind of getting the idea of what we're trying to do here. We're trying to give us some confidence values on the indicators that we're looking at and plot that on the chart so that we can see when we're most confident on making a decision on what to do. So if it is not below 35, it obviously needs to return 0. So now we have all of our points. What do we need to do with our points? Well, quite frankly, we just need to total the points up. So we would go to make a new variable, total points, set it equal to is green points plus SMA points plus our RSI points. Now we have our total number of points. Let's also plot our points. Fix this comment. All right. So we have RSI. I'm actually going to leave that on there for now. Let's plot our total points and set the color equal to color dot yellow because we have a blue RSI already. Save that. You can see it applied the changes to the chart. Now, what you're looking at on the yellow line is our total points for each particular candle based on the settings that we gave it. Now, we'll go ahead and look in depth at one in just a moment, just to make sure the calculations add up. But you can see with the RSI, once it got really low here, below 35, there was kind of a mirror effect on the point system, because as RSI went below 35, it popped up in reflection to the moves that were happening there. So let's go ahead and take the RSI off, because that might be a bit confusing, and it kind of changes the scale that we're working with. Now we can see something that looks a lot more like the actual point system. It's not really flat looking like it was in the previous picture, but you can see there are high points. So when the price dipped low here, you got more points than before. And let's actually take a look at this particular one. We do not have a green candle, so we should get 0 points for that. It's below the 50 period. All right, so it has 0 points, and it has 14.71 points. That means the RSI was 14.71 points below 35. So what's that? 20.29. Let me add the RSI indicator back on here. Actually, let me add mine back on here, the smooth RSI. Takes a second to load. And let's see, it was this one, and the value was 20.29. So that's exactly what we would have expected based on our point system. So you can see now, the entire concept of this is you can apply points in a weighted value based on where the indicators you're wanting to use are. And in order to do that, you can combine multiple indicators. Now, we just used really the RSI and the SMA here. The SMA was just a trend, but the RSI we actually used to indeed weight it. So in the next video, I'm going to add another indicator on it. And let's see, we're going to... Yes, we are going to add another indicator on it. And I think that is about it, because we're going to cover an indicator that we haven't done. So we're going to add one more indicator in here, and then we are going to take a look at a different condition that we can use to add more points. So for example, with the RSI, we covered, you know, if it's in a positive trend, but there's different things you can do with a simple moving average other than just look at whether it's going up or down. I'll take a look at something like that. And then in the last video, I believe there's just going to be 3 videos for the scoring development. And the last video, we're going to take a look at loops in PineScript, and we're actually going to try and find those periods where there could be that divergence with the RSI, and to help score our system a little bit better. Now, it's not going to be perfect. I don't think anything is going to be perfect, but we're going to be able to apply more points further in as the price goes down, and I'll show you exactly how we do that in those videos. But I appreciate you watching. The source code for this is going to be posted on my TradingView profile on the scripts. You can see that my profile is set to the username BigBits.io. There's a link to it in the description. We are going to be posting that script here eventually. I want to finish it, complete it. I want to get the inputs down really nicely so you have a lot of great options. You can actually come up with your own settings for it and find the most optimal one for you. But for now, I think that does it for the video. If you like the video, please leave a like. If you like these types of videos, please subscribe. That really helps me a lot. And of course, have a nice day. Thank you. this is David for BigBits, and in this video we're going to take a look at using line breaks in labels and also in alert conditions so that your text can be formatted a little bit better and look a little bit nicer when you're looking at it on a screen or whatever device you're going to receive your alerts on as well. So it's actually very simple. All you really need to do is within your message you need to use a special character or a special set of characters, which is the backspace and in. I'm going to remove my head so that you can kind of see this a little bit better. So we have printed a label here, and this is actually a persistent warning, which is something this video is also about. We're going to show you a warning on this particular indicator by default, and if there's some reason you need to share a warning with someone, this will keep the warning always in this position on the indicator, because what you really probably don't want is if you're giving a warning, you don't want this message to kind of slide back and disappear over time. If you want someone to actually see it, you want it to be persistent. And then also I've given it the option to disable that warning so it'll disappear too. But that is not really what I'm focusing on first. We're going to focus on these line breaks. Now the label itself, we have this particular message, and what I noticed when I first did this is that the message was so long it looked ridiculous. It ran off the edge of the screen. So to fix that, we had to use a line break, and to do that we had to use \n, excuse me. And keep in mind, if you use the spaces there, they will be added to the end or the beginning of the particular lines. So your alignment might change if you leave those spaces in there. So I took the spaces out between the word and the line break. That is something that's up to you, of course. And I also did a double line break here. So I gave it some space in between the end of this message and this one, so that it was pretty obvious this is a new paragraph. Now this isn't always necessary. This is something that just might come in handy for you. But we're also going to take a look at alert conditions and line breaks in alert conditions as well. So in order to do this, you have to create an alert condition, and if you're not familiar with those, I've made plenty of videos about those. I've actually made at least 2 videos about alert conditions. And we're going to create an alert that's going to fire, and it's going to show what the line break looks like in an alert. Now I'm going to go ahead and set this alert up for you. I've actually already got it set up, so I've already selected our indicator we're using, and then I'm also selecting this condition. We're not worried about any of the other ones, and we're going to show a pop-up, but I'm also going to send myself an SMS, and I'm actually going to show you this on the screen so that you can kind of get an idea of what it's actually going to look like. Now I'm going to hit save. It's going to take a moment, and then the alert will fire because it's always set to be on. So the alert is going to turn on. It's only going to happen once, so it's not going to keep doing this. But it's going to fire immediately. Then you're going to see what it looks like in the alert message. You'll see the line breaks actually work in this text box here. But pay attention. There you go. The alert fired. And this is what a line break \n looks like in an alert. Now on the pop-up message here, on this little modal pop-up on your screen, there isn't really any line break actually occurring. I'll kind of mention this to TradingView to see if they can actually fix that. I'm not sure why it wouldn't work, but we'll see. And this does actually work outside of that, so I'm going to bring my head back on here. While that alert is up, I'm going to show you once I change this. Let me hold my phone up to the screen and then we'll zoom in. There we go. Switch to this one. Okay, try and hold my hands still here. You can see there is line breaks in this particular example on your text messages. So if you wanted to use your line breaks, you can do that, and you'll actually see those in your other messages with your alert conditions. So that's actually pretty cool. Now back to the warning message. The way to do this, and you can always reference this script to get the code for this, but I have an input to show the warning message, and by default it's going to be true. That way, whenever they add the indicator to their chart, they're always going to see the warning message. And if you've seen my last video, you'll know that the reason this warning message is on here is because in certain situations, when we're comparing one security to another, they might not produce a comparison because the bars in cryptocurrency might not match the same bar times with traditional markets, because the traditional markets close and cryptocurrency trades 24/7. So you might have a bar for Saturday in cryptocurrency where a traditional market doesn't because it's closed, and you can't really compare those, so it's not going to plot those. So that's the reason why this is showing on this one, and I gave it an input to show or not. I'll show you how we do this. We're just going to use a simple if statement. If our show warning is still set to true, we're going to create this label. We're going to put our message in here, and we're going to set our colors and stuff. If you want to make this stand out more as a real warning, you can do that as well. But the important thing is we always have this set to occur on the current bar index. But if you do not update this, it's either going to continue to print a new label every single candle, and they're going to keep sliding back and you're going to keep printing more and more labels. But the way to fix that is you use the label delete function, and you always delete the one from the last candle. That way, when a new candle starts, this one gets deleted and the one on the next bar index will pop up. That way, it's going to be persistent and always show up at the current position on the indicator until they go into the settings, uncheck show warning, and it's gone. And that's also why I put the little message at the end, disable this message in settings, because if they don't want to see it, they can just uncheck that there, and that's all there is to it. So in this video, we talked about our line breaks in our labels and also in our alert conditions, but we also talked about a way to add in this kind of persistent message in our chart as a warning or whatever you might want to do, so that it doesn't disappear and it's always at the front and getting the attention of the user. Now, the indicator itself that I'm using, I talked about in the last video. I might have already mentioned that. You can find it in the publicly available indicators. So you can just search for any security and it should be out there. Is it case sensitive? Okay, maybe I haven't published this one, I don't know. Or maybe it's just not cached yet. But you should be able to find this one in the public library. It's going to be published publicly. And that should be all there is to this video. If you have any questions, please leave a comment, or if you have any ideas or suggestions for other videos, please leave a comment in the comments section. There's also plenty of links in the description for the video for other things you might want to do, such as checking out my TradingView profile, where you can see the other scripts that I've created here, and you can also follow my profile and it'll kind of give you updates when things happen with the account. That is about it for TradingView, but oh wait, there is one more thing. You can always check out the referral link that'll give you $30 if you decide to use a paid plan on TradingView. So if you've been following the series and you want a paid plan, you can use the referral link and you get $30 towards your next paid plan, and so do I. Yeah, that's it for TradingView. I almost forgot about that. That's kind of important for me. Other than that, if you like the video, please like. If you like the video, then why not subscribe? I do these videos pretty often, and there's all sorts of ideas, and I like to listen to viewers. I've created several indicators and videos based off of what viewers have said, so subscribe and check out the latest videos. I definitely appreciate it. But other than that, thank you. Have a nice day. Hey, this is David for BigBits, and in this video we're going to continue on to our next step of the scripting tutorial for the TradingView Pine scripts and creating our own indicators. And we're going to do a little bit more here, and we're going to improve upon our last video, and we are going to add the ability to select the source of the data used to calculate our moving averages, and we're also going to add another type of moving average to our indicator. So in the last video we had 4 different moving averages, and now we're going to have 5. We're going to add in the whole moving average, which I personally really like, and then we're also of course going to be changing the source. So let's go ahead and take a look at our end product here, and once we discuss what we have at the with the end result of our code, then we can take a look at how we got there. So in this video you're going to see a lot of the changes come of course from these inputs that we're having to create. In the last video I showed you how we could do different moving average types, but in this video we've added yet another moving average. I wanted to show you how the if statement works when there's multiple lines of logic. In the last video there's really only one line, and also we've added the source. So when you're calculating these moving averages, you have to tell it what numbers to use from the candle information in order to calculate the moving average. Now by default we were using the close price, which is the final price of the candle, and in going forward maybe you want to use something different. Maybe you want to calculate based on the open, the high, the low, or these other options. Adding the source option gives you the flexibility to change based on what you really need, and a lot of times it might not make a lot of sense to do it with moving averages to use the high or the low, but it might make sense in other indicators, you know. But for us, using the close is just fine. I'm going to leave it there for now. Well, once we get done, let's show you what it's going to look like first of all before I move on. So we have a 50 period SMA using the close as the source on this green line here for MA1. Let's change it to where it's only going to use the highs. You can see there's a bunch of wicks to the top on these candles, and that should make a pretty good adjustment here compared to what we're seeing. Let's change our source to the high. Yeah, you can see the line is reasonably higher than it was before, and I think it has a lot to do with these wicks. If it wasn't for us selecting high and using close, you can see it used these values up here as opposed to the close values, which were down here. So you can see the moving average is a little bit higher. Now most people don't use that, so it's probably not going to be too useful for you to use to compare prices and such, but it's now an option for you. It's in your arsenal, and you're going to see how to do that. So like we've done before, as you can tell from the inputs are just storing those selections that you're making into a variable, and we're going to have to use that variable later when we do our calculations. Now the source is a specific type of input, as you can see. I've highlighted that here. That is what tells the modal pop-up here that you can select these types. Now this is a built-in list, kind of like how we had our options list that we created in the last video, so you can select different types of moving averages. This is actually a built-in list, or if you're familiar with development, you might consider it an enumerator, a enumerated list, or a predefined array, whatever you want to call it. We have got these available built-in for us. Now, I've shown you can change them, but we've set the default value to close because that's probably going to be the one that's used the most. I think that's pretty fair to say. Now that we've done that, you can see just how it worked on the inputs. You select it and it saves it to the variable that we've defined. Now we've done this for all of the moving averages so that each one can be defined by its own. So not only can you select a different moving average for each of the 3 lines, you'll also be able to select a different source. So if you wanted, as I've shown you before, to just use the high on the 50 period SMA, you can do that. If you wanted to use the low on the 200 period SMA, you could do that. You can have any kind of combination you want, and that's part of the development that we're doing, is we're trying to make this code as flexible as possible so that you can do as many things that you want without having to recode the indicator entirely. And that's a very valuable thing to learn when it comes to creating your own indicators, is making them flexible so that you don't have to go back and change a lot of things. All you have to do is change a setting and you've changed the entire indicator for the most part. There's a lot of good things you can learn just by making your code flexible like that. And that's something, even if you don't use TradingView and you're just a regular programmer or software engineer, that's something you can take away and use in your actual code just to make it flexible. Now, moving on, we've set our sources for our different moving average periods, and this does make a change with our logical if statements. And that change is that we have to, instead of manually passing in the close here, we have to make sure to tell it we use the correct source. So when we're setting our MA1 values, we have to tell it when it's doing the moving average calculation that it has to use the MA1 source. Now, if we told it the MA2 or 3, then it wouldn't give us the right calculation. Now, I'm also not sure if I switched over, but on the inputs, you can see there is a description in the code. There's a comment that'll take you to that link that'll show you all about the different input options that you have that are built in, and the source is just another one of those built-in options that are already there. Now, we're here talking about the different logic to set our moving averages. In the last video, we discussed the logical if statements and how you can set a variable equal to the if statement, and it always spits back the last line of code. Now, this is the whole moving average calculation. And originally, when I looked at it, it was 2 lines of code. And I know I mentioned earlier we were going to look at how multiple lines of code work in here, and I apologize about that. But really, it doesn't matter how many lines of code you have in here, as long as the last line is what you want to set this value to when you set a variable equal to an if statement. Now, I could go in here and I could put 0 in here, and it's really not going to do anything. There's nothing for it to do. You would think if you wanted it to return 0, then you would just comment out this line, because now that's the last line. It would set MA1 equal to 0. But if I left it in, it would execute this line, but then it would execute this line, and only this line would be set to the MA1. It wouldn't even think about 0 when it was setting that value. We don't need that at all, so I'm just going to go ahead and take it back out. But now you can see the whole moving average is in there. Let me show you, the whole moving average follows very closely along with price, and it's one of my favorite indicators. Let's go with the 50 period whole moving average. You can see it doesn't lag behind price very much at all. It's definitely one of my favorite indicators to use, and from what I've read, just a general change in direction of a whole moving average can indicate a small trend change. So when the moving average started trending up, that is when you would have a good signal that the price would probably move up. Now, it all depends on what look back periods and other information you use. So this one might not be the best example, but it is an example nonetheless of the whole moving average. Now, if you're curious about the different moving averages, please just Google. There's tons of information on these things, and we're going to add more. If you can think of more that you want to see in here, please let me know in the comments for the video, and we will continue to add more and more. So this is our calculation for the HMA. It's pretty complicated compared to the other ones because it isn't built in. The HMA uses a combination of weighted moving averages, and it uses a square root as well. So we're doing some more complicated math here, but the point is, whatever your last line is, whatever this last line spits out gets assigned to the variable assigned to the if statement itself. So really that's all there is. We just got to repeat that over and make sure you have your spacing correct on your if statement so that they execute correctly. And that about does it. You know, that's the video. We have all of our different moving averages. We have all of our different sources. and we can continue to add moving averages. Now, there are ways we can improve it. I mean, just looking at this code, it looks a little redundant. I'm pretty sure in our next video, we are going to be discussing how to consolidate some of this code and improve it even more. Let me take a look at my profile, and if you haven't seen my profile yet, I encourage you to go check it out on TradingView. It's in the description of the video, the URL is, that is. And you can come here and you can look at all the different scripts I've already created. Now, we're on scripting tutorial 4. I've already got 6, and I'm working on a 7th already. So make sure you stay tuned to the video series, subscribe on YouTube, and you'll get to see all the videos for all these other things. So in the next video, it looks like we're going to be covering crossovers, and I think this is the video we also reduce the code for the moving averages. We don't have to rewrite the same code over and over. We're going to create a function, if you're familiar with development, that we can reuse to calculate the moving averages. It's going to be really helpful going forward, and we can use the idea of a function in other areas as well. Then after that, we're going to move into forecasting, which can also show you where we expect the moving averages to go. So a lot of great things coming up. Please subscribe if you want to see those. Like this video if you like what you've seen so far, but we're moving on ahead, and things are going really great with our scripting series. If there's any sort of indicators or anything that you want to see done specifically, please leave a comment here on YouTube in the comments or on social media in general. The links are all in the description. I usually read all of those for now. So please go on and leave a comment, and I will take a look at it, and if it's really good, we'll probably end up doing it. I love doing the things that people suggest. Those are usually the most fun thing to do, and it's rewarding for the people I do them for. So looking forward to that. So thank you for watching. Have a great day, and I will definitely, well, hopefully, see you in the next video. Bye. Hey, this is David for BigBits, and this is going to be our 3rd video in the scoring development, and I plan on this to be the final video in the scoring development kind of mini series within our big series here. And what we're going to be doing is we're going to be adding loops, and we are also going to be adding some bonus points to our chart based on its current values. Now, the reason we're using loops, and I've mentioned this in the past videos, if you haven't seen those, please go back and at least watch the last 2 videos so that you're aware of everything that's going on. I know they're a little bit longer than my normal videos, but this is a pretty big topic overall to cover, and there's a lot of big things going on inside of it that are important to understand, especially loops here. So what we're trying to do with these loops is we're trying to loop back through the previous candles and try and catch this trend where the price is going lower and award it more points as it goes on. That way we don't get the best signal back here, we get it closer to the bottom. Now, in order to do that, what we're going to do is we're going to have to create a new value here. Make a section for our indicator bonuses. And let's make one for the RSI. And I made this a float value because I got some errors when I tried to do this before, and it needed a data type associated to it. So in order to do a loop in PineScript, it's similar to a C# loop if you've done those, but we're going to be using their standard format for the for loop, and it's like this. So if you wanted to loop from 1 to 10, you would make your loop like this. You would want to have 4 spaces on the next line. Code goes here, and that would take care of your for loop. Now, if you wanted to break out of your for loop at any point, you would just use the break keyword, and I used a semicolon because I'm used to that with C#. Now, for us to be able to go back and loop back or look at the candles in the past, then what we need to do is we actually need to use a negative number. So if we start at 1, it's not going to work. So I'm going to show you how this works, and we're going to add points to it, and hopefully it all makes sense at the end. Now, what I used was I wanted to go back 7 candles. So let's pretend we're looking back here at this huge dip, and we're on this particular candle, and we want to look back 7 candles around here, and we want to see where our RSI was at that particular time. Now, to do that, of course, we need to go back 7 candles, and the reason I wanted to start with the -7 is because I want the highest or the furthest candle back first. Now, if I wanted the first candle first, that's easy. I just start with 1 and go backwards. But what I want is I want to start with the farthest candle back first and then get closer. Now, I'll set that to -1, and we'll go up by 1. Now, that's going to do is that's going to set us 7 candles behind, and each iteration through the loop it's going to go up by 1. So it's going to go 1 candle to -6, -5, 4, 3, 2, 1 until we get to the current candle. So how are we going to give it bonus points? Well, first thing we need to do is we're not going to give it bonus points unless its RSI is less than 35. And because that's where we did with the actual points up here, we had to make sure that the RSI was less than 35. Why would we give it bonus points if it wasn't already less than 35 as well? We want to see that the RSI is still below those numbers. So let's go back to our RSI. So in this particular instance, let me make this the whole screen here. So once it dips below 35, we want to continue adding more and more points the further below 35 it is. So not only do you get the points for how far below 35 it is, you're also going to start getting more and more points added on the lower it is. And these are going to be cumulative. So the farther back it stays underneath of that, the more points you continue to get. So we're under 35. Now, how do we check? Well, that's for the current RSI, and I apologize. I should have done this when I started typing it a minute ago. We want to get that candle back, but if we just pass in I, it's going to be -7 is a zero-based index that only goes into positive integers, so that's not going to work. We're going to have to call the absolute value of I. So to convert that -7 on the first iteration to an actual 7, it'll go back those 7 candles to the 8th candle back. Now, this is how we look back in the past. We're looking now at the 7th candle back, making sure it's below the 35 value RSI, and to make sure that this is still valid. So to make sure we didn't have a huge jump in the RSI and the price jumped along with it, we also want to make sure that the price continued to go down. So what we're going to check is we're going to check to make sure that the current close is actually less than the close I periods back. So we're not only are we checking that the RSI back here, if it was below 35, but we're also checking that the close in the price was below that as well. So it just kind of confirms that we're giving this bonus points because the price continued to drop, even though we were correct in noting that it should have been worth points below 35. So let's go ahead and continue here. We're working with our if statement. We need to give it another 4 spaces. I believe that was correct. And now we are going to use our RSI bonus value, and we are going to set it equal to, now to reference the value outside of the if statement, we have to use this colon equals, and you would have known that if you had watched the other videos so far. It's way back in one of the earlier videos where I covered the if statements. Now, I believe we also covered functions with those as well, but for this, we're going to set our RSI bonus. Now, we also need to include its bonus already so that it's cumulative. And then we're also going to add on top of that the value of the current candle back. Now, I on the first iteration is -7. So with the absolute value of that, it'll make it 7. So if it's true on the very first candle that our current price is below that candle's price, which it appears to be, and the RSI is below 35, which it appears to be, it'll give us 7 points. Now in the next candle, if one of those conditions weren't true, it just wouldn't add any points, but we would still have 7 bonus points for the current candle. And that continues on, and as the price continued to drop, those points continue to accumulate as a bonus for the current candle. So that means your points are going to continue to go up. Now they may fluctuate a bit, but for the most part they're going to continue to go up. Now there's ways we can take care of averaging that out, but for now we're still just doing an example. So hopefully this will make more sense how it is. Now we don't need this break line here. And with our total points, we also need to add in now our RSI bonus. Now, I've already gotten the code for the stochastic. It's the exact same code, just for the stochastic. Excuse me, just for the stochastic. And I'm going to paste that in here, but I need to fix the capitalization because I was kind of lazy earlier and I did not do it correctly. Give me just a moment. This will be a lot quicker than if we did this with live coding, excuse me. Or, yeah, if we had coded this all again, we would have had to have done this anyway, but we're saving a little bit of time by not having to type all the conditions and stuff. Got that. Now let's add those stochastic bonus points in on our total points as well. Save it, and you'll notice there'll be a lot more points here if I did it correctly. I also wanted to use this stochastic D, and of course I did not capitalize all of those. My apologies. Thank you for holding on and waiting right now. It's hard to keep up with all of these different variables between everything that I'm working on. Okay, I believe that has it, and actually what I wanted to do was I wanted to use the stochastic D. Now the reason I wanted to use the stochastic D is because it's a little bit slower and it'll stay at a lower level longer. And if we're trying to catch that drop, even if it continues to go up on the K, the D will still be lower, so that's one of the reasons I wanted that one. Now, let me see. Of course, I referenced it wrong still here. The joys of live coding. Okay, that took care of that. So you can see our value is actually a lot higher here now. But how do we make that even higher? Because it looks like it's still even lower point values than that, and it's hardly any higher than that. And there was a dip in between here. But honestly, it wasn't a terrible time to buy anytime it got below, or it got above a certain point here. They seem like decent times to buy. Going back, you can check. They're actually pretty decent. Of course, that was during a bear market, but it did correctly kind of call an uptrend there. Small one there. It's a Very good one here. That one probably wasn't high enough. Those probably weren't high enough, but you get the idea. It's kind of helping you here by combining all of these different points together based on your confidence value. The lower those values are, the more points they're worth. And looking back and accumulating all those previous points, it starts making a difference. And you can see these points are adding up to a value that's going to be helpful. And you can imagine a scenario where you have different indicators that you're more familiar with, that you know how the points should be weighted, and how you can come up with a scoring system to work for you. That's what this little mini series is all about here with the scoring development, is kind of help you with your own point system if you want to do something like that. Now, another idea that I came up with when I was doing this was to use these points that we've come up with similarly to how we used our stochastic and our RSI bonus to reward the candles that have higher points cumulatively, like we did with the price drop. So if the price continues to drop and we had high values before, why should we continue to not add points to them? The farther you go along, the more valuable they should be. So just based on our points alone, we're going to add more points on top of it. Now, to do that, we're actually going to have to come up with a new total here. And let's just go ahead and copy this code. Yeah, let's copy that code from the stochastic. And we're going to call this self bonus. Go back and change some of the wording here. And thank you for watching this video. I know it's going on for a while, but hopefully you are learning quite a bit. And we have to reference our total points instead of any specific indicator. Our indicator is our total points that we're using. And we also need to change this from a P to something else because it's already being used in that particular loop. And we also have to change the references to it. Excellent. There we go. And we need to change these as well to the self bonus. Excellent. That's got that. Now we need to plot another total. And that is going to be our total points plus our self bonus. And let's color this one blue. All right, so let's try and save this. Hopefully it works. Ah, it worked. I don't believe I did this correctly. No. Okay, I know exactly what I did wrong here. But you can see it does apply bonus points, but it's only doing it to the ones below 35. I actually meant to give it bonus points for the ones above 50. Yeah, 55 or 50. So we actually need to change the condition here. We need to make that only give bonus points based on previous candles that were above 50. And now you can see, even though there was that kind of jitter there, it continued to go up as the price continued to go down. Now, you notice there's a huge dip between those. That's going to be kind of hard to avoid because the price did bounce. But in this particular case, maybe you can zoom out on the chart to, say, a 3-day candle, and it makes a little bit more sense. So thank you for watching. Please leave a like if you like the video and subscribe for other videos similar to this. Going forward, we have a lot of different things to cover. I've got a lot of ideas for PineScript, but there's also going to be other video series on smart contracts. I'm going to start sharing some practical examples on those soon, hopefully, if I haven't already by the time this video comes out. And if you want to get the indicator that we've been working on here, I am going to end up adding it to my TradingView profile. That's BigBits.io on TradingView. The link should be in the description for the video. But you can see all the other scripts that I've done and take a look at those. And if you're curious about any of those, I've pretty much made a video for all of them. And you can go back and look at all of those videos. But thank you once again, everyone, and have a nice day. Hey, this is David for BigBits, and in this video we're going to go over the fill function again for TradingView with its Pine script. And what we are actually going to be doing this time is a conditional fill, which isn't a actual option that's built in to the fill function itself, but what we're actually going to be doing is making this happen using the code and a couple of tricks to use conditional filling to only show it when we want it to be shown. Now, one of the things you'll notice from the last video is we compared plots to plots and horizontal lines to horizontal lines, but in the last video we were using a plot for the RSI value, and we were using a horizontal line to show the overbought and the oversold lines on the RSI indicator here. Now, what we're going to be doing in this video is we're actually going to have to use a plot so that we can compare the RSI to the oversold or overbought lines. And what we're going to be doing is we're going to do a conditional fill where if the RSI is above the overbought line, it'll fill that in between the overbought line and the RSI only when it's overbought green or red, excuse me, and then when it's below the oversold value, it'll fill between the oversold line and the RSI value as green. Now, you'll notice I took away a lot of the code if you watched the last video, so really all we have now is our plot, the RSI value for that plot, and then of course the values we have set for the overbought and the oversold levels. Now, we're going to have to plot our overbought value, and we're going to have to set that equal to a plot. And what you'll probably be tempted to do is to do exactly this. Let me go through here and show you this. Okay, you can see this essentially gives us what we had in the last video, although it doesn't have the little gaps between the lines. What is actually happening here is you're plotting a single value consistently over and over, and you'll actually see it here, whereas with the horizontal line you didn't see that value here. And we don't really need to see this line. What we really want is we only want to see the fill between the two. So we're going to have to do a little bit of work here to get this to actually work. Now, the first thing we're going to do is we're actually going to set our display for the value equal to display.none. So now it should no longer show that particular value. So now we can't really see what's going on. You can see it still actually prints the value up here, but if you want to get this effect, you're probably going to have to do it this way. So what we're going to actually have to do is we're going to use a conditional plot. Now, we've seen this before in the past, and it's very simple. So we're just going to compare our RSI to our overbought, and if our RSI is greater than the overbought, then we're going to plot that horizontal line at the overbought value. Otherwise, we're not going to plot anything. So I'm going to save this. You still won't be able to see anything, but we should be able to compare it. So you'll see the blue value here where it says NA. That's where the RSI is not above the overbought value. And I'll actually go ahead and cut the display none out so you can kind of see what's actually going on. So it kind of shows you there what's going on, but it doesn't really give you the best picture there for what we're actually looking for. Now, what we're going to be doing next, once we set that display to none, we're going to be filling between the two, and we're going to start with our overbought, and only when that exists can it show up on the screen. So then we're going to fill between it and the RSI plot, and we're going to set that color equal to color.red. So this should only show us a fill between 70 and RSI when the RSI is above 70. And I'm going to set the transparency equal to 0. That way it's standing out very well and you can actually see what's going on. There you go. So you can see it did it a couple of times here where it went above the overbought value, and it stands out a little bit better in areas where it goes very far overbought instead. So really, just to do the same thing, we can just copy and paste what we have here and replace our values in regards to oversold. So we'll replace our OBs with OSs, and we're going to be looking for an RSI under the oversold value, and if it is, we'll return the oversold value, and we'll change this to say oversold, and then we will fill between our oversold and our RSI, and this one will actually be lime to match our other nice green colors. And our transparency is already set. So there you can see now we have a conditional fill to where when our RSI is above the overbought value, it'll fill between the RSI and the overbought value, and then also on the RSI and the oversold value. And like I mentioned in the last video, if you set the RSI overbought and oversold values to an input to where people can go to the settings and change those here, then those values can change, and you can actually change where the fill actually occurs without editing the code. And if you want to know how to do that, you can go back in some of my other videos where we talk about inputs, and you can get that figured out. Now, if you want to check the reference for PineScript, you can always go to the PineScript language reference manual. I highly suggest you check this out so you can get an idea of what's actually going on. But other than that, I think this was a pretty quick video overall. I haven't really checked the time on it, but I think everything went really well. There may be another video related to fill. I will have to check out a couple of things and see if I actually want to go that direction in the next video. But we've had two now, and that's pretty advanced for the filling if you're not familiar with coding. This might be a little harder for you to understand or grasp, but I think if you've been following along with the series, you should have gotten what we've done today pretty well. But other than that, that's it for this video. Please, as always, like this video if you did like the content, and subscribe if you want to see more videos like this. You'll get a notification when other videos come out. Always check out the TradingView profile. You can follow me there where you can get updates on my ideas and scripts. And of course, if you are considering a paid plan on TradingView, please consider the referral link in the description of the video where you can get $30, and I will also get $30 towards another renewal of the paid plan. So that is it for this video. I thank you very much. I'll see you in the next one, and have a nice day. Hey, this is David for BigBits, and in this video we're going to take a look at gradients one more time with our fill function in Pine on TradingView. And this time, instead of just creating a nice pattern, we're actually going to be giving them meaning or some importance to the gradients so that you can actually look at the chart and tell that the gradients actually are showing you detail or information about the indicator you're working with, instead of just looking nice like the repeating gradient pattern in the last video, which if you haven't seen, we'll do a very good job of explaining how we get the gradients on the fills, whereas this video we're going to focus on the importance of the transparency and the colors that you're actually seeing on the chart itself. So I have pulled up right now the color gradient framework, and I referenced this in the last video as well. This is the Pine Coders account, their mod on TradingView. They have several scripts that are very good to reference when you're looking for these sorts of things. The color gradient is really nice. The framework that they did has two different modes, and I'm going to be showing you a different mode for the actual gradients. Now, the first one they use is an advance and decline. Now, that would be this particular fill method. And you can see here that when the difference between the two moving averages is increasing, the gradient gets more opaque and less transparent. And you can see when that difference between the two moving averages decreases, it continues to become more transparent. And similarly, we have these gradients on the RSI, I believe that is down here. I forget what they said it was with. It might be just the histogram on the MACD though. But anyway, the relative mode for the gradients takes into account the strength of the values around it before, and so what you're going to see here is that they don't always continue going down in a very very much predictable way as you would if you just looked at the chart here and you knew that the moving average was getting closer. You could tell, you could know exactly how much the grading is, whereas here it's a little bit more relative, so it's a little bit more flexible, I should say, as opposed to the advance and decline. Now, I should say you can take a look at their code. If you are new or an intermediate programmer, it's probably going to be challenging for the new programmers, but if you're intermediate, you'll probably be able to figure it out once you look at it for a little while. But for those of you who are more advanced programmers, it's going to make complete sense if you go through the entire script and you get down to where they're actually plotting things. Now, what I wanted to show you was the gradient pattern that I came up with, which is based on the strength of the difference in the fill. So what I mean by that is, so for example, let me move this over here where we've got a better example. So for example here, similar to the advance and decline method that the Pinecoders account used, what I'm looking at here is the strength of the difference. So whenever we have a crossover, the moving average, the difference, whatever that is, it's always the same as the maximum difference between the two. So as the number continues to climb at the beginning, the difference between the two is always at its maximum value until finally the difference between the two moving averages becomes less than the maximum difference. Like it was right here, I would say that was the maximum difference at this point in the green cycle. And you can see the difference continue to go down, and we are tracking the difference where this is, the difference is in reference to the maximum difference on the moving averages. Now you can see here it continues to widen and it approaches the maximum difference, which was back here, and you can see it starts to get less transparent and continues to become more transparent here as it narrows. And you can see here it sets new maximum differences as it gets very wide on the fill here, and it quickly approaches the transparency, full transparency, as it gets ready to cross over. You can see it starts getting brighter and brighter on the red and back to transparent. So it's always going to approach transparency before the crossover, and it's going to be, depending on how you have them set up, it could be very quickly. Now let's actually take a look at the code, and I've actually kind of set up our code here to where we're using a bit more of the coding styling guide that they have on the Pinecoders website, and we're going to try and stick to that going forward, just to make sure that we're following their standards, so that if somebody in the community is also following their standards, we're also going along with it, so when people look at our code they can also read it as well. So it's going to take a little bit to get used to, and I'm going to have a video coming up soon about that, so just look out for that. But for the most part, if you followed along through the whole tutorial series at this point, you should know what we're doing. It's just basically changing where we are doing certain things in the script and how they are being named, essentially how we're declaring the variables. That's about it. Okay, so we've added a couple of inputs since the last video. These are just for our moving average length, and I haven't bothered to give them a title or anything. We've also added our citation in here, which is where we have copied the code over from the gradient framework from Pinecoders, and we made a small change. Since we are working with percentages, instead of just using numbers 10 through 1, we are actually going to be using numbers 1 through 100 or 0 through 100 because we're working with percentages. Now, we also had to come up with a function to determine where we are relative to the maximum amount. So in our fills, our maximum amount, let's look at this one. This stands out a little bit better. Our maximum width is right here. We're fully opaque. Now, when we're here, our current distance between the two, let's say, is 5, just for an example, and our maximum distance is 10 back here. We're getting the percentage difference like relative to where we were to the maximum. So if our distance here was 5 and our distance here was 10, our difference would be 5, which is 50% of 10. So what we're going to be doing there is we're actually going to be returning this number because the G value is greater than 40, but it is not greater than 50. So it's going to return this value, which is pretty much in the middle of our alpha gradient that we're using based on that function. Now, if that was confusing at all, please go back and watch the previous video where I explained that a little bit more as to what all of these numbers mean here. Now, we do have to declare several variables as well. We have to keep track of the maximum difference since our crossover. So whenever there's a crossover, we start keeping track of a new maximum difference. And then we also have to keep track of our current difference. We don't actually have to keep track of it to reference it in the past, but we do have to instantiate that variable so we can use it later. And then also we have to have a variable to calculate and store our current percentage difference. That would be the 50% value here. Now, the logic on this is very simple, and that is just that we are going to check for a crossover. If there is a crossover, we're actually just going to reset our maximum difference since equal to the current difference. And I skipped over this, my apologies, but the current difference is always the absolute value of the MA1 minus MA2. So you're always going to get a positive value there because we're measuring a distance or a length, and those are always positive values. Now, of course, when I say we have the crossover, we're setting our maximum difference equal to our current difference because this is the first difference we've had in this new series with the crossover. And the same goes with the cross under as well. And unlike the previous video, we don't have to keep track of the direction we're going. We can know that just by knowing that we haven't had a new crossover and we are still under or still below, and we do that in our plot down here. But otherwise, if this isn't a crossover and this isn't a cross under, the only thing left to do is check to see if we have a new maximum. So while these numbers are getting farther and farther apart, we continue to update the maximum difference. Say it was 6 back here, 7, 8, 9, 10. It continues to update. So our maximum difference here was still 10, because it didn't increase anymore, but our current distance was 5, so that's how we got our 50% difference we talked about earlier. Now, that is really about all there is, because then we called that function that I mentioned for the percentage of, which returns based on our current value and our maximum value relative percentage to where it is on the maximum amount. So on that 5 and 10 example, it was 50%. That function is going to set our current percentage difference equal to 50 in that instance. And then all we have to do is plot. So this is actually very simple to do. The logic is very easy to read in my opinion, especially compared to all of the functions in the gradient framework, and that's very good work and it's very advanced and it looks a lot better than what I have here. Let's be honest, this is mostly just green all the way and a couple of bars that aren't so green. But if you're wanting to capture strength relative to the maximum value, this is a very easy way to do that. Now, of course, we have our plots, and then the last thing we do, of course, is our fill function, which is last 4 videos here have been about now, and this is going to be the last one on fills for a while, hopefully, because I think everyone has had their fill of fill, right? That was a horrible pun. Okay, so we have our fill, we're plotting 1, 2, and of course we know the color based on whether or not MA1 is above 2, and then we return green if it is and red if it isn't. We pass in the percentages now. Since we changed these values to have a 0 in the singles digit and move the 6 or the 1s digit over to the left, we now can reference those versus their percentage values. So really, that's all there is to this particular video. And I do want to go back to the Pine Coders example because it does look much better than what I have here. And I'll probably end up publishing this particular script so you can see it and you don't have to copy it by watching the video. So keep a look out for that on my profile. You can always check that out. It's in the description of the video below. So if you haven't checked it out, please follow me there. That'll help you out to keep up to date with what I've posted. The color gradient framework, let's go back to that and check that one more time. You can see I think it's a little bit nicer because our value stayed much more opaque for much longer here in our moving average differences. So I believe this looks a little bit better, although it would still kind of be nice to have it somewhat opaque because it kind of completely disappears here. So there are drawbacks and benefits to both methods, I would say, but it's all very nice. It makes your chart look a lot nicer. And one other thing that I wanted to mention before the video is over is that you should consider thinking outside of the box here. These gradients, we are working with what we see. We see a moving average and another moving average, but what you could do is actually use another indicator to give you your gradient values. So for example, let's take the relative gradient. You could use this relative gradient from the MACD or the RSI, whatever they chose to use, and you can actually put that gradient between the moving averages. So you kind of combine the two into one particular indicator. Now, if you all want to see that, I can do that, but really all there is doing exactly what we did, but instead of plotting the difference for the moving averages, you just plot the differences for the other indicator, the MACD or the RSI. So I hope that helped. If you like this video, please leave a like and check out the profile, of course. And while you're down there, hopefully you're giving it a like. If